The bank is developing an application software to streamline the work processes and reduce the paperwork involved, ultimately minimizing the turnaround time of the loan approvals. In addition, we are currently reviewing the ACF Memorandum of Agreement and operational guidelines to address gaps and review the existing clauses that may hinder uptake, such as treatment of non-performing loans for effective implementation of the guarantee under the ACF and the SBRF. I'm optimistic that these improvements, together with the recommendations from this workshop, will spur the performance of these two schemes to a much desired impactful position in our society. I once again wish to thank you for responding to our call to attend this workshop, given your busy schedules, and wish you fruitful deliberations. It is now my honor to welcome the Deputy Governor to give his remarks and officially open this workshop. Mr. Deputy Governor, sir.
Thank you, Richard. Distinguished participants, ladies and gentlemen, a very good morning to all of you, and a warm welcome to this important workshop where we are going to review the operations of the Agricultural Credit Facility and the Small Business Recovery Fund. The Bank of Uganda does appreciate and applauds your partnership, thank you, in implementing these two schemes, the ACF and the SBRF. Today, we are here to review and improve the operations of the ACF and the SBRF. As you all know, agriculture is the backbone of our economy. It does provide jobs for 2/3 of Uganda's labor force and contributes to nearly 1/4% of our national GDP. Notwithstanding this huge potential, this sector faces several challenges, with access to affordable financing being one of the most significant challenges. That's why our initiatives like the ACF and the SBRF are very, very crucial, and we're here today to ensure that they are working as effectively as possible. One thing I would like to assure you that Bank of Uganda on its own cannot reach the intended beneficiaries. So we are working through the participating financial institutions, and that's why we want to hear from you. How best can we reach the last mile of the beneficiaries? So you may recall that the government of Uganda set up the ACF in partnership with commercial banks, the Uganda Development Bank, microfinance deposit-taking institutions, MDIs, and credit institutions as participating financial institutions. The ACF provides medium and long-term financing to projects in agriculture and agro-processing, focusing on commercialization and value addition, mainly in agriculture. The ACF loans advance through the PFIs, the participating financial institutions, at less than market lending rates because of the risk sharing that is involved. And the ACF, as you all know, is administered by the Bank of Uganda under Memorandum of Agreement. The ACF has grown steadily in volumes and value of loans extended to farmers and agro-processors in Uganda. As at the end of 2022, that is 31st December 2022, a total of 751 billion Uganda shillings had been disbursed to 2,970 eligible projects across the country. The government's contributions amounted to 380.7 billion in disbursements, up from 21 billion in 2010 when it was operationalized. So you can see this phenomenal growth over state of a decade. So currently, out of the 33 supervised financial institutions we have, 22 are participating financial institutions in this initiative. So despite the scheme's success, it has not yet reached its full potential due to several challenges. This includes the fact that some participating financial institutions have a non-participation and low uptake. So I want to hear from you, why is the uptake low? There's also limited financial literacy on the side of the potential beneficiaries, as well as inadequate sensitization of both the credit officers and the intended beneficiaries, among others. Therefore, the Bank of Uganda is currently reviewing the operations to address these gaps and improve uptake of both the PFIs and intended beneficiaries. You know, success has got to be sustained, all right? So in as much as we have achieved this, we are looking for where are the gaps in these initiatives so that we even continue scoring more and more success. For those of you who follow the English Premiership, there was a team that won the Carabao Cup. They beat one of the biggest teams in Europe. I don't want to repeat what happened last night. So sustainability is very important in as far as success is concerned. So regarding the Small Business Recovery Fund, Uganda's micro, small, and medium enterprises, MSMEs, employ over 3 million people, and it accounts for 90% of the private sector and contribute more than 70% of the national economy. Look at the statistics. Small, medium enterprises, they employ over 3 million people. They account for 90% of the private sector and contribute to 70% of our GDP. So if we really want to spark growth in this economy, we need to pay attention to the small, medium scale enterprises. Therefore, given the fact that they play a significant role in creating low-cost jobs, they play a role in reducing poverty and promoting industrialization and fostering economic growth, their needs need to be addressed. But we also know that these SMEs face a key constraint due to the lack of access to affordable financing to expand and grow their businesses. And moreover, the COVID-19 pandemic disproportionately affected these micro, small, medium enterprises. As they are labor intensive, they were affected by the lockdowns, and they also had limited liquidity reserves and a lack of assets to use as a collateral to access quick credit. Now, in addition, as you're all aware, the quarantine and the lockdown measures imposed by the government led to the demand-supply chain disruptions, raw material shortages, transportation challenges, and cash flow disruptions, and they were badly hit. So what did the government of Uganda do? To address this challenge, the government established the Small Business Recovery Fund in July 2021, which provides concessional loans to small, businesses using the same model as the ACF. Notwithstanding this initiative, the fund has registered a very low uptake, with only 6.58 billion disbursed as at 31st December 2022, partially due to the restrictive operational guidelines and low levels of awareness. Now, you see, the total resource base for this fund is about 200 billion. And since its establishment, under 7 billion has been disbursed. So it really begs a question, what is the problem? Yes, one can say that, these guys are borrowing very, very small amounts of money. I know I was looking at one application that was recently approved, was some young lady whose salon had been affected by the lockdown, so she wanted to buy more of these hair dryers, and the amount of money they were asking for was about 500,000, 1 million. So one can argue that there are many applicants, but the amount of money they're taking is small. But still, that's not strong enough reason to address a sector that employs 3 million people, accounts for 90% of the private sector, and 70% of the national economy. We need to up the uptake of this. So you then recall that in March last year, to be specific, on 3rd of March 2022, we were here to discuss ways of improving the fund's absorption, which led to the amendments of the SBRF Memorandum of Agreement and operational guidelines. As a result, the Bank of Uganda issued a circular communicating these changes, which have been neatly summarized by Richard, the Executive Director of Finance, who's heading these initiatives. I really want to hope that these amendments are going to motivate increased uptake of the SBRF by the businesses that are still struggling from the pandemic effects, despite the economy opening. So we really want to hear from you. What is still contributing to the low uptake, notwithstanding these amendments to the MOA? And what can be done to increase? You see, this is the only way that we can reach the last mile. Remember, most of these potential beneficiaries are the poor. They are at the bottom of the pyramid. And the Bible in the book of Proverbs says that he who lends to the poor lends to the Lord, right? So what are we doing about lending to the poor? Because by lending to the poor, you are lending to God, and God will pay us handsomely. So what is it that is stopping us from lending to the poor? So I therefore want to call upon all the stakeholders to support this transformative sector in which most of our population is engaged if we are to achieve socio-economic transformation and sustainably achieve the middle income status. So let's get started and make most of the workshop to optimize the opportunities of the ACF and the SBRF in driving economic growth and development. It is now my honor and privilege to declare this workshop officially open, and I thank you all for listening to me, and God bless you.
Thank you very much, Deputy Governor, and also the EDF for your words. Deputy Governor, it is elephants that are known to kill by goring and lashing out their tusks. But this time, I don't know whether you support an elephant in a tree, but this time you're even trampling. Please be kind. Yeah? Please be very kind. There are many among us that are mourning. Yes, it has stayed for so long in that tree. Ladies and gentlemen, both the Executive Director Finance and the Deputy Governor have spoken about the state of both the ACF and the SBRF. And what we see is that the problems both funds are facing are common. They are common problems, and you are the team that's going to help us sort this. For agriculture, there's a gentleman called Swaminathan. Swaminathan is known to be the father of the Green Revolution in India. And he said that if agriculture goes wrong, nothing else will have a chance to go right. So we need to make it right. And then for the SBRF, we know that our small players in the economy need help. And an American businessman and politician, said that economic recovery must be earned, and it will be earned by both entrepreneurs and small businesses. So we need to help both these parties to pick up and move forward. At this point, as our program, I will invite our colleague from the Agro Consortium to come and give us a presentation on the Uganda Agriculture Insurance Scheme. Bosa, please. Thank you.
I'm not sure. Then there's a point.
Thank you very much, Master of Ceremony, the Deputy Governor, the ED Finance, and all the other distinguished guests. My name is Munya, in full Mnyarazi Dhaka. I'm with the Agro Consortium. The Agro Consortium is the implementing partner for the government and the private sector for the Uganda Agriculture Insurance Scheme. So in 2016, July, the government decided that there was need to look at the challenges that the farmers were facing that they couldn't do much about. These included drought, floods, pests, and diseases that were affecting the farmers, and they had little to do to mitigate these challenges. So together with the private sector, especially the insurance sector, and the other stakeholders in the agriculture sector, a scheme was born. And the scheme was to look at mitigating these challenges that the farmers were facing. And the objective of the scheme was to offer something that would be standardized and that would actually help the farmer, and that you could go anywhere and you get the same product, you get the same effect, you get the same benefits and compensation that you could expect, and then you would not be tossed from one place to the other. The second part of the scheme objectives was, like I said, to mitigate the financial losses that the farming community was facing. And obviously, the main, I think the ED Finance has already said one of them, to de-risk on behalf of the farmers, on behalf of anyone else who was either lending money or investing in farming. The delivery channels for this were through different channels. Through banks, which is one of the reasons we are here today. the banks through them directly selling those that don't have bank assurance, and those that have bank assurance through bank assurance, directly through to the farmers, through insurance companies, and also through different aggregators, NGOs, and people like that who are helping the farmers with either off-takers or input dealers. So this brings us to our role in the agricultural credit finance. I think some of these have been already touched by the Deputy Governor and the ED Finance. And I've just summarized the top three of what the insurance role does for the ACF. First is to de-risk on behalf of those that are taking on these facilities. So for example, we offer a lot of products that would look at failure for paying back the loans because your production has failed due to drought, due to floods, or any other of those calamities. We also offer a big component that we think is not really highlighted that the insurance companies do, which is risk management. What we do is we've got specialist inspectors that we have trained, and we have what we call risk officers who can help the farmers from how to practice the good farm practices, looking for the right crops, and whether it's livestock or it's crops, whatever it is, depending on the geographical area that you are, what is the right thing to farm, what do you need to farm, and how do you farm. We offer those services through the different inspectors that we have and the risk officers that we employ across the country. We also work hand in hand with the Ministry of Agriculture also, the extension officers, to see how we can also mitigate this. Because once we have those mitigations from the risk officers or extension officers, it means the risk itself is lowered for insurance and is also lowered for the farmer. And in extension, even those that are lending, it means the risk is lower to you. The third one that we'll talk about is we provide an alternative to collateral especially for the small holder farmer, because most of their risks are normally drought and excessive rainfall. And if we can be the ones to carry that risk, it means we are in a way providing a way to have a collateral on behalf of the farmer. We do play a complementary role to the ACF, and we like to think that we are ready to always continue playing this. So I would like to assure the Deputy Governor that we are always going to play our role in terms of making sure that we are de-risking, so that maybe one of those reasons why the financial institutions might not be lending more might be some are still very worried about the risks. We are there to take some of the risks. Maybe they need to come and see what other exposures that they are happy about, not happy about or worried about, or what other processes can be done to make sure that they are satisfied and can continue lending, and we can pick up that risk for them. So maybe that could be one of the other solutions. So our role is to make sure that we unlock credit for the farmer by providing a fallback position for the financial institution as they lend, and if there is a calamity, the farmer can actually get that compensated by the insurance company. Another role that we see is that we would like to, the types of loans or products that we we offer or are insurable under our scheme include all production loans and anything that you do for value addition, but mostly in production. So if you are farming, whether it's you are doing crop or you're doing livestock or you are doing aquaculture, or any type of agriculture enterprise that you do, we do provide products for that. And we have a variety of eligible enterprises on the scheme. From the crops, we basically cover any crop that is being done in Uganda, including sugarcane, trees, and the like. We are also into protecting fish farming, aquaculture, poultry, piggery, livestock farming, and also those that are in beekeeping. So there's no excuse really. We actually can cover anything that you have in your farming enterprises. We have also seen quite a lot of growth in the lending by the financial institutions. We believe we have also contributed to this, and I think I'll have a slide showing the growth of what has been happening in the sector. And we are also the channel at which the government is passing on the government subsidy, which helps the farmers pay for their insurance. So with the government subsidy, every year an allocation is done of about 5 billion. This 5 billion helps the small scale holder farmer or the large scale holder farmer in different levels to pay back, to pay their insurance. So for the small scale farmer, the government contributes 50%, whilst the farmer will only pay 50% for the premium that is required for insurance. Whilst for the large scale farmer pays 30%, and 70%, and the government contributes 30%. Then with this, we've also been able to make sure that we pass it on to those institutions that are assessing the ACF, and then they've also benefited in the government subsidy, which has also lowered the cost of insurance to the farmers. Of the achievements so far, I think it was spoken that there are 33 financial institutions who could have benefited from ACF, but only 22, I think, have been accessing, of which we have 10 that are already with our scheme, which represent roughly about 50% of that. We hope we can actually be able to extend to all those 22 who are already participating, so that they can also mitigate this risk and take up agriculture insurance. We are not sure why the other 50% might not yet be taking advantage of the scheme, and some of these reasons that we'll need to just figure out what we can do to assist or to help. I said I'll give figures. Unfortunately, I do not have them broken down from ACF, but I think in future we shall be looking at that. But we're going to look at what we have given insurance to for the loans that are in our books. So far, we've grown in the last 2 years from the 2020-2021 fiscal year to the last fiscal year. We've grown insured loans from about 900 billion to 1.38 trillion. We have increased in return the insurance premiums to about 70 billion, and we have now insured over 375,000 farmers, of which 95% of these are small-scale farmers. Our aim is to really help the small-scale farmer and move them from subsistency to more of semi-commercial so that they can look after themselves. We have also increased a lot of farmer interface. What we call in farmer interface is when we do awareness and sensitization activities to make sure that they are aware of the government scheme, the credit facilities that are available for them, or how they can access loans through banks, and these are then covered by insurance, and what the insurance means, how do you claim, how do you enroll to these schemes. We have done this notwithstanding challenges. We have had challenges, so I would not say it has been rosy. There have been challenges. And some of these challenges some are from us, as we are trying to still make sure that we streamline what we do, but some are also from our partners. So for example, a lot of the PFIs do not declare to us their returns in time, and sometimes they declare with missing information. This causes us to not be able to streamline or adjust products or give insightful reports to the various stakeholders. So that's what has been one of our challenges. And as those that know insurance is driven by data, is driven by a lot of insights. And if you don't have that, your products are not as efficient as they should be. So that's one of our issues. The other issue which goes with that is partial data. For example, data without where the farmer is located, so we cannot tell what is going on in which area. So maybe the bank will just say the branch where the loan came from, and this does not really help us qualitatively when we are producing our products or designing our products. We are using a lot of technology to help us monitor losses, and without these locations, for example, it's very difficult for us to make efficient use of this technology. And other issues, like I said, some would come from our side, would be delay in compensation. Recently, we've been having a bit of delays in that because of some stakeholder issues where some of the funds that we use have delayed. Fortunately, this has been worked on, and I think in future this is going to be a thing of the past. Then also, we have also had a limited number of stakeholders, service providers. Insurance, especially agriculture, works with a lot of other service providers, agronomist companies, veterinary services, and people like that. And when they are not equipped enough to be able to give us the right information or to do the right inspections or reports, it also affects the quality of what we give. And as a growing industry, we still have to develop a lot of these service providers. So the growth has been going faster than we could actually train the people to match up with the growth. But we have had partners who have now helped with capacity building, and this is helping. And then we are now employing quite a lot of technology to actually mitigate this and rely much less on actual physical inspections or visits. And we only do that, continue to help or assist us to build further our partnership or our complementary role with the ACF. And one of these would be to make sure that there's assistance, that we make sure that there's better turnaround time with returns. that I talked about as a challenge. And the second one is to make sure that all the details that are required are actually also provided. If we require to say of the loans that you have given, how much of that was ACF, how much of that is in which sector, which enterprise, and stuff like that, it actually helps all the stakeholders involved and us when we are doing our products. And then lastly, to encourage the other 50% that are not yet insuring, to see if they can embed insurance in their because we believe that we are going to be able to take off quite a bit of your challenges, as the other 50% we have been insuring have seen that we have actually been able to do quite a lot of reducing their non-performing loans by insurance. I think that was my presentation. Thank you.
Thank you very much, Munya. Ladies and gentlemen, I hope that you've picked up on what's happening on the insurance side of agriculture. There's been a slight change in the program. Please take note. There are just two small changes. One is I will be inviting the Executive Director, Uganda Bankers Association, Mr. Wilbrod Owor, shortly. And after he has spoken, we will be breaking a bit and we shall have a group photograph right outside at the steps of this conference center. That is the change. After the picture, then we shall return and hear from the Agricultural Credit Facility. Ladies and gentlemen, please join me as we welcome Mr. Wilbrod Owor.
The Deputy Governor, Bank of Uganda, the Executive Director, Finance, our partners, the Insurance Consortium, colleagues from the industry, in the media represented here, ladies and gentlemen, good morning to you all. First and foremost, I want to convey the apologies of the UBA chair who was invited, and I'm standing in for her. She traveled out of the country yesterday and could not be here. Mine is really just to stimulate a few thoughts that I'll leave you with in the course of the discussion, because this session, I think DG and EDF were quite clear why we are here, is how can we expand ACF, SBRF, uptake, what are the challenges, how can we deal with it? And it's not the first time we are having this kind of meeting, and that's why there have been revisions in eligibility criteria, its terms and conditions, just so that we can expand the uptake. But I think it's quite interesting, and finance is just one part of what is in the whole chain around this whole agribusiness or agriculture and all the things, or the whole ecosystem. We had a session last year in December in Nairobi, and many of the colleagues are here. I hope that those ideas that we touched on will come today, because as you know, we were planning to sit with Bank of Uganda following that meeting. I think let's use this meeting to bring them out, since we have the audience here anyway, and push for the actions that we had talked about. But the whole agriculture ecosystem, perhaps there are some market challenges or imperfections and a whole scattered framework around the market for some of the agricultural products. Because out there are people who trade in produce and cereals, and there's very big trade going on. Okay, they give buyers money, they buy the cereals and they sell them. Perhaps there is something we are missing as structured or regulated institutions, and certain dynamics either we are struggling to play in that are constraining the amount of disbursements. Perhaps the level of organization of the farmers themselves. There used to be, and I'm old enough to remember some of these things, the cooperative movement was a strong, very powerful movement. And at the lowest farmer level, there were societies, and production was mobilized. There were unions. The Central Cooperative Union was for input structures, and there was a marketing one, and a whole framework leading up to the National Cooperative Alliance. And there was a bank behind it. Of course, we are very familiar with its own challenges that it went through. The point I'm making here is that perhaps a certain level of organization was creating impact. In Nairobi, we also discussed some of our own challenges as financial institutions in supporting ACF, because it was an agribusiness meeting. And we know them. And my team that were with in Nairobi, I think we had more than 15 financial institutions who participate in ACF. Today, please bring out those issues that we discussed. We will look at the template that comes out. If they are not there, I wrote them down. We'll share them with Bank of Uganda. But perhaps sometimes at the institution level, we look at them with a certain lens as banks, as supervised financial institutions. And I think we should bring those challenges that we talked about so that we address them. Because I think we also identified our own internal problems as financial institutions. Some of the other things we talked about is how do we treat agriculture? Are we provisioning it in the same way that we make provisions for other businesses? Because agriculture may be having some unique circumstances around it. Apart from seasonality, there are other complexities in agriculture. Maybe we look at them differently. Even coding, there was a very huge debate then that actually most of the bank lending may be agriculture, it's just that we code it differently. Because if half or 3/4 of the manufacturing in this country is agro-processing, and we are lending heavily to manufacturing, who knows? Again, this debate, let that come up. One of the challenges we had with SBRF when it had just been launched, in the middle of COVID, was uptake, and I don't think that has changed significantly now. And as we were revising the terms, including eligibility, remember we had just gone through restructures. And for some of the small businesses, if you provided them funding, wouldn't it be refinancing struggling facilities then? But the good thing is once we revised SBRF, we took into account all the various internal challenges that we had discussed. Like I said, there are people doing good business. I sit on another board with impact investors, and they're working with agri-fintechs and disbursing huge sums of money at the lowest level. Over time, these agribusiness fintechs have accumulated a lot of good data, which is good for lending decisions. I think let's explore that bit and understand what is it they are doing, in addition to some of the constraints that I mentioned that PFIs may be facing, but even us internally, what we are not doing right. Beyond those challenges, there is a lot of goodwill. They are not just impact funders. I'm sure you appreciate that. There is a green growth agenda, the whole sustainability, climate finance, and so on and so forth. There is even what they call blue finance now. Yeah, beyond the green of plantations, the oceans are blue, and therefore there's blue finance, beyond the brown finance we have been used to. There is goodwill. There are institutions happy to find support us crack these challenges together with the regulator so that we can finance and support that particular sector with its statistics that supports the entire economy and unlock the opportunities that exist there. So I'm hoping that this conversation that will go on up to 4:30 will really touch all these things, even if there may not be all the answers, particularly today, but at least let them be listed there. Somewhere along the way, one of us may come with a better model, or pick models by benchmarking from other countries. For those people who come from the cattle keeping regions, biological assets in some of the other markets are big things. People keep cattle, they sell them for beef and milk, but beef. And there are trucks for those who use Mbarara route and so on. There are people doing big business by buying animals and trading and selling cows big time. And they make money, they have never made losses. So, and there are people who finance them, meaning there must be some opportunities and ways and means with which these risks are mitigated and business is done there. So let's open our minds. Mine is to call upon colleagues in the sector that give this session your best. Let's list as much as possible. Even if there is no immediate solution today, let's list them. We'll find out and crack this. And from Nairobi, you agreed that within the industry, we don't have the Agri Consortium within UBA. Like we have the other committees, operations, risk, credit, legal. We probably need to have an agribusiness consortium so that the conversation doesn't stop at sessions like this, and we use those sessions to work through the difficult ones. I know our credit committee does not necessarily sometimes go into all the detail of a specific sector because sector dynamics differ. But I think that agriculture is big enough for us to have a full-time agribusiness consortium and of course work with all the other parties, insurance, and most certainly the central bank so that we unlock opportunities therein. Let me keep the remarks short. I hope that I've accumulated some good points for discussion and we look forward to the results and wonderful deliberations thereafter. Thank you very much.
Thank you, Wilbrod. I'm particularly elated that you never disappoint even when I pounce on you. And you had to pick it off cuff. Very well done. And ladies and gentlemen, the one thing that I pick from Wilbrod's submission for all the things that he said is the presence of opportunity. And the first ever self-made female millionaire, it's a lady called Madame C.J. Walker in 18-something in America. She said that don't sit down and wait for opportunity to come. Just get up and go and make your opportunities. What he said here are so many things full of opportunity, and you, as the people driving private sector credit, you can create your opportunities in there. Let's take a break now. We are going to have a group photograph outside. I will request that we have this high table move out first, and then the rest of us can follow, and thereafter we shall return for the ACF presentation. Thank you. Photograph, please. Let's settle quickly so that we move to the next item on the program. That are having their tea, let's have it quickly and quietly so that we do not interrupt. Thank you. Yes, we'll have a working tea. We'll have a working tea. If anyone needs a bite, we have it both here and even upstairs. So.
Thank you, Victor. Good morning once again. My name is Winnie Mulisa. I've already been introduced. I would like to thank you for coming, honoring our invitation, setting aside all your other important engagements, so we appreciate your presence. The Deputy Governor and the Executive Director of Finance have already spoken, given you a brief background about the ACF and the Small Business Recovery Fund. So I'll quickly run through, talk about the ACF and the Small Business Recovery Fund. What are the features? What are the application requirements? Because I've been informed that some of the banks don't actually know what the requirements of applying for an ACF loan or a Small Business Recovery Fund is. We will talk about block allocation, which was highlighted by the Executive Director of Finance. Show you the performance, highlights of our performance, our key achievements, and amendments to the Small Business Recovery Fund that the Deputy Governor has alluded to, and then the key challenges that we as fund administrators have encountered while administering these two schemes, and what we think would be possible solutions. But of course, through the discussions that we're going to have, we are hopeful that we will have to hear from you of what your challenges are and what you think or you want to see as improvements, so that we can have better implementation of these funds and also better uptake, as the UBA Executive Director has mentioned. So ACF was established in 2009 to bridge the financing gap. Government realized that for the agriculture sector was not being given adequate attention. Most of the banks that were lending, a few of the banks that were lending were giving very, the financing was low, but most of it was also very short term. And so the ACF was established as a partnership between government and you, the financial institutions, to address this gap, but also to support the commercialization of the sector, focusing on value addition and modernization. The SBRF, on the other hand, is a recent establishment as a result of COVID-19, and so it's a COVID recovery fund. So both of these two funds are a public-private partnership. These are the features of the ACF. The maximum loan amount is 2.1 billion, but over the years, as the UBA chairperson mentioned, that we have had revisions based on engagements with you based on consultations with the farmers. And so the maximum loan amount was lifted. The 2.1 can be lifted to an amount depending on the nature of the project and the benefits that accrue from that project in terms of employment, in terms of revenue generation, in both local and foreign export, in terms of tax, and so on and so forth. The maximum loan amount is 8 years, again addressing the issue of medium to long term. The minimum loan period is 6 months, and this was also revised to accommodate the Tier 2 and Tier 3 institutions, the MDS and credit institutions, that usually lend very short term. The grace period is up to 3 years within the 8-year loan period. And the maximum interest rate is now 12%. When ACF was started in 2009, interest rate was 10%. But then it was revised over the years to now currently at 12%. The facility fees, these are charges that include application fees and processing fees and all these other charges that you're very familiar with. These were capped at 0.5%. Again, the objective of this was to minimize the cost of borrowing by the farmer so that we meet the objective. The ACF operates as a refinance. So participating financial institutions appraise the loans or the borrowers and lend to them 100%, and then claim from Bank of Uganda for the government portion of it. For commercial banks, it is 50%. For the Tier 2 and Tier 3 institutions, it is 70%. And so, when we say interest rate to BOU is 0, what we reimburse you is interest-free. So essentially what that means is that you're actually lending at 24%. The contribution percentages, 50-50, I've already mentioned it. Now, we introduced a grain facility along the way, again through the revisions, but also through a need by government to address the issue of bumper harvest for farmers who did not have access to market. And so the component of working capital was introduced to be able to facilitate the off-takers to buy the excess harvest from the farmers. So grain facility is a little bit different. The maximum amount is 10 billion. Again, this can be lifted. Some of you have been beneficiaries of the lifting, depending on the economic benefits and the size of the project. The maximum loan period is 2 years. The interest rate is 15% per annum. And then the facility fee at 0.5%. The reimbursable percentage was maintained at 50-50 for both the Tier 1 and Tier 2 and 3 institutions. What are the eligible projects, or what are the projects that we finance? Almost everything along the value chain is addressed under the ACF through the numerous revisions. When the scheme was started, the emphasis was mainly on value addition. But over the years, because of the need to finance the smallholder farmer, who would then be able to supply the off-takers, we introduced a number of improvements. But the components or the projects that are financed include the agricultural machinery and equipment, such as tractors and irrigation equipment, and so on and so forth, acquisition of agro-processing machinery that include dairy processing, hatcheries, milling machines, and so on. Infrastructure for post-harvest handling that includes silos, warehouses, cleaning and sorting and packaging equipment, cold storage facilities for the perishables. Farm expansion and infrastructure, and this came on board as a result of the revisions. And these include land opening, paddocking, valley dams, financing for improved pasture, and so on. Purchase of agriculture inputs This was another revision that was introduced later on. I think it was 2013. Initially, it was limited at 10% on the total cost of the loan, on the total loan, but this was lifted to now financing 100% for agriculture inputs to accommodate primary production. Acquisition of biological assets. This is another improvement or addition that was brought on board, and UBAED has mentioned. Now, currently the limit is 80 million. But of course, from what from our engagements with the various stakeholders and from the banks, there's need to remove that cap. And so through this review that is ongoing and through this workshop, we are looking at seeing how to remove the cap to address the need for financing biological assets. And then, of course, working capital for grain trade. Now, there are some projects, there's some areas that we don't finance under the ACF. Refinancing of an existing loan. If somebody has a non-performing loan and probably wants to access the ACF to pay it off, this is not allowed. Purchase of land also was not provided for, the assumption being that the farmer already has land. And so what they need is financing to put that land into productive use. Maybe this is an area that we probably need to reconsider. I don't know. We will get to hear from you. Planting of trees is also an area that is not accommodated, but we have had so many calls for people saying we need to consider planting of trees as a financeable activity, also going by the current need for the green revolution that is going on. Trading in agricultural commodities is also not financed under the ACF, the exception, of course, being the grain that was introduced later. Now, I just want to touch briefly on some of the application requirements by Bank of Uganda. I know some of you are familiar with them, but for the benefit of those who are not, PFIs are expected to submit these requirements to Bank of Uganda. One is, of course, an application letter from the PFI on the loan that is being submitted, a copy of the borrower's offer letter, which for us is very important because this is what identifies the terms of that loan and whether it is an ACF loan or otherwise. The internal appraisal and approval of the PFI is very, very critical because, one, the PFI is responsible for appraisal, but also we want to make sure that they have actually done the necessary due diligence and have actually approved the loan. Then, of course, a copy of the business plan, copies of appraisal documents, and that's a business plan, certificate of incorporation, if it's a company, the board resolution to borrow. I'm only doing this because we have had a number of back and forth with some of the banks in terms of these documents. Some banks, when they submit applications, they don't attach these documents, and so and that causes delays in approval by Bank of Uganda. So I thought that if I highlight these, and then you can take note of this, so that we shorten the approval process. Now, we have had amendments. I've already spoken about them. One of them is to reduce the proportion of risk share by the MDIs and credit institutions to 30%, removing the limit of financing agro inputs. I've already touched about it. Financing biological assets, that was introduced later. It wasn't there initially. Financing grain trade, that was introduced in 2015, increasing the maximum eligible amount from 2.1 billion to 5 billion 10 billion actually for grain trade. Well, initially it was 5, but in 2018 it was later revised to 10 billion, but also that the cap can be lifted on a case by case, as I mentioned. Introducing the minimum loan period to 6 months, again, I mentioned that in the beginning for the MDIs and credit institutions, and then the introduction of the block allocation. Now, block allocation is the product that was introduced in 2018. This was introduced mainly targeting the smallholder farmer because their financing requirements were not being addressed. Why? Because most of them don't have things like financial records, they don't have the audited accounts, but also most importantly, they don't have collateral. Collateral, by collateral, I mean like land titles or other immovable assets that the banks normally seek out for. And so this was introduced to kind of incorporate that smallholder farmer who, as the Deputy Governor mentioned, constitutes about 80% of the agriculture sector. And so how does block allocation work? We decided to earmark 1.5 billion for each PFI to lend to smallholder farmers loans not exceeding 20 million. Why the 20? We also were cognizant of the risk involved, the fact that we are now saying don't consider the stringent collateral requirements, but other alternative options. And so we said to do that, let's minimize the loan amount to up to 20 million. So a financial institution can lend those small loans and then have them blocked together and submit them as a block to Bank of Uganda within the 1.5 billion portfolio that we are marked per PFI. What are the alternative collateral requirements that we are saying banks should use? One, the credit history of the borrower. If a borrower is a repeat borrower, for example, with you, and has borrowed and paid back their loans well, we're saying this is a consideration that you need to look at. Also, and that also speaks to the CRB. Then the other alternative would be using group guarantees. I know, for example, that the Tier 2 and Tier 3 institutions, they do very well with this kind of arrangement, the group guarantees. And we've seen it work quite efficiently. So we're saying banks can consider looking at this because you do lend out also character loans. So if a borrower has been with you for, a number of years, they pay well, they have good cash flows, these are all considerations that banks should use to extend credit to these small borrowers. Now, this is a snapshot of our performance position as at December. You can see we have about 20 financial institutions participating under the ACF. We want to see more. We want to see all the 33 participating because this is a responsibility that we took on, and we promised government that we are going to work together to stimulate this sector, to grow this sector. And so for us as the central bank or the fund administrators, we would want to see that figure grow from 20 to 33. We have received the value of loan applications of about 1.1 trillion. Of that, we have disbursed about 751 billion. GAU contribution is 380 billion, and the PFI contribution is 370. So we thank you for those that are actually actively lending under the ACF to see that that portfolio has grown. That wasn't the case about 5 years ago. So this is really to say that thank you for those that have continued to support, and to urge those that are not lending to please pick up, and let's work together and see that these interventions succeed. As ACF, we have, I think, made some significant achievements. One is that we have extended credit to about 751 billion to 2,970 borrowers. These borrowers include the large off-takers that provide market for smallholder farmers, that also provide jobs to the industry, and so on and so forth. Through extending credit to value addition, we have also contributed to the export promotion. We've increased the level of confidence for the PFIs, that now we see more of you lending to the agriculture sector, regardless of the fact that maybe we would want to see that 751 billion grow into trillions, but at least you're lending. Now the question is, at what cost? And this is now why we're saying, please, there's a facility here that provides affordable credit. And really, when you look at it, you are lending at 12% per annum without an interest charge on the refinanceable amount. So like I mentioned, essentially, you're really lending at 24%. So why not utilize this facility to extend credit to the sector? We have supported primary production. About 222 billion of that has gone to primary production. Again, that sector covers the majority of the smallholder farmers. We have enhanced financial inclusion through the introduction of the block allocation. And then, of course, employment, like I mentioned, through extending credit to the off-takers. Now, the Small Business Recovery Fund, like I mentioned, is a recent introduction. The Deputy Governor has talked about it. The Executive Director has talked about it. It's a COVID recovery fund. But we have seen that since its introduction, the banks are really not taking it up. And one of the key objectives of this workshop is to try and find out from you, what is it that is hindering you from lending? Because government put this fund as an intervention to help the small businesses get back to where they were. And I think if they have been enhanced, if they have been, helped, it's also good business for you. We have made some amendments to address some of the challenges that are affecting uptake. And these include reducing the minimum number of employees from 5 to 2. The last workshop that we had with you, I think that was last year in March. This came out as one of the challenges. Some of you said the minimum number of 5 was restrictive. Some of these are informal businesses, and so we need to be able to address that issue, lower the minimum number. And so we have since lowered the minimum number to now 2, between 2 to 49 persons. We have also increased the loan amount accessible. Initially it was 100 million, now it's 200 million. So a borrower can access up to 200 million under the Small Business Recovery Fund. The other issue that we have addressed is the turnover. The annual turnover, when SBRF was introduced, was between 10 million to 100 million. From the feedback that we got from you, you said this number should be increased because there are small businesses that make a lot more than 100 million. So now the turnover is a maximum of 300 million. We have also allowed that some of these funds can be used to pay off the non-performing loans. UBAED mentioned that some of the small business, if not the majority of them, were struggling because of the pandemic, because of the effects of the pandemic. And so there was a challenge or the risk of lending to them when they already have loans that were non-performing. So we have said, okay, can we then allow that some of the money that is borrowed can be used to pay off the non-performing loans? And this is why the maximum loan amount was also increased, so that the small business is allowed to have some working capital as well. And then we have introduced the block allocation mechanism also, just as it is under ACF, that those small businesses that don't have collateral can use the options I mentioned under ACF to access financing under the Small Business Recovery Fund. Now, we are hopeful These amendments are going to trigger lending because this is feedback we got from you and we acted on it. These amendments were put into force in November last year. And so we said, we have already communicated through a circular, but we said, let's have this dialogue for those that may not have seen that circular, but also urge you to please lend to the small business community. These are now the salient features. Take into consideration the new amendments. I don't think I have to stay long on them. I've already made mention of them. And this is the performance to date, as of 31st of December. As the Deputy Governor has mentioned, that out of the 200 billion, we've only lent 6.6 billion. Now you can see, and yet the sector is still struggling. So now the question is, what is happening? What needs to be done to trigger more lending outside of what has already been done? Some of the challenges that we have encountered in the implementation of the two schemes, as I mentioned, the low uptake or even non-participation by the financial institutions. As you noticed, only 20 out of the 33 are actively participating. And many of them prefer to lend their own funds. This is feedback that we get from the public engagements that we have. People come and say, oh, I have approached this bank so-and-so, and they've told me they can't give me ACF or they can't give me SBRF. But if you want the loan, we can give you our own money. And so they come back to us and say, but we know there are these funds and we know that they are affordable funds. Why aren't the banks lending to us? So the question now becomes, it is not an issue of the borrower being risky. It is now an issue of the banks not willing to extend the affordable credit. Then, of course, the incomplete information submitted by the banks to BOU, I already talked about it, this back and forth, and the ED Finance Bank of Uganda has already talked about us trying to streamline the documentation through coming up with an application software so that maybe we make it easier for you to submit this information and shorten the turnaround time. Then the issue of the stringent collateral requirements for the smallholder farmer still comes up, and we are hoping that the product of block allocation and agriculture insurance that you've had will be able to remove or help to remove the risk averseness by the banks. The limited financial literacy, this we have noticed, and we have also picked up from the banks. Many of the smallholders are not financially literate with respect to maybe opening up accounts or keeping records, and on the basis on which you actually lend. And then the inadequate publicity. And this is now where we really have to urge you to come together. Let's work together, because you see, you are the interface of the borrowers. They come to you before they come to us. And so we want you to be the ambassadors. We want you to be the ones to spread the word about these two schemes. This is why now the publicity of this scheme, you working with Bank of Uganda, is very, very critical. And then the lengthy process of write-off, I know this has been raised from even the numerous workshops that we have had with you. We have taken note, we are working on it, and we are hoping that during this review, we will address this issue. And I think once we do, hopefully that even those that are not participating will come on board. The possible solutions, I've already touched on them. Continuous engagement, like we are doing now, so that we hear from each other. We tell you what our concerns are, you tell us what your concerns are, and then we see how we can come up with solutions. Scaling up of financial literacy. This, as Bank of Uganda, we, through our financial inclusion, will continue to do that. But we also know, as I mentioned, that you as our ambassadors, you could do, you do a lot more than what you're doing. Train these farmers, tell them what needs to be done, tell them the importance of keeping records, and how this will help them access credit. Stepping up or scaling up of block allocation. We want to appreciate the few banks that, I don't want to mention them for not biasing, but we want to appreciate those who have really picked it up. And we want to urge those that haven't, that this is a very good product for the smallholder farmer that you can actually utilize. The process is quite less rigorous, because it is you to assess the risk, then you lend and submit to BOU for reimbursement. The claims for the reimbursements are a lot faster under block allocation. Encouraging the farmers to work in groups, and this really is for them to be able to benefit from block allocation. Strengthen collaboration with the PFIs, I've already talked about it. Then streamlining the right of process, the Executive Director of Finance already talked about it, that we are doing a review of this clause to see how we can shorten the right of process. Thank you very much. Victor?
Thank you, Winnie, for taking us through the status of the ACF. Ladies and gentlemen, I am reminding you, in your folders, we have this registration form. I request that you kindly fill it, and then when we are stepping out, we shall be collecting. And it will also help us share these presentations with you personally. So kindly do not forget to fill in your email address. We are going to break a bit, and this is the reason. The next item on the program will involve group discussions, and this is where the heart of the matter is. We are going to break into groups. I will read them here, but also when we come back, they shall be displayed on the screens so that you can see which group you will belong to. But the two most important items during the group discussions are the first two bullet points. One, the amendments to the ACF Memorandum of Agreement 2018. What you discuss here, just like you did last year, is what contributes to the amendments in that agreement, and also the challenges faced by you, the PFIs, in implementing these funds. Those two are critical, and what you submit will help to improve how these funds are structured. Now, for those of you that came very early, I apologize that we shall overfeed you. We are going to break a bit, and in that break, we shall reorganize the room a bit so that you can sit comfortably as you discuss. So we'll request you to step out. We have the real tea now with the good bites up in the gallery and also in Addis Hall. So we're going to break for 20 to 30 minutes. Please stretch your legs, get to know each other, crack deals. And then in 30 minutes, maximum 30 minutes, we shall be back and we shall be directing you to where you'll be sitting. Once again, kindly fill in this registration form. Now, I'll read the groups and how we shall be seated when we return. Group 1 has 7 institutions. That's ABC Capital Bank, Bank of Africa, Exim Bank, GTB, Guarantee Trust Bank, I&M, KCB, and NCBA. You don't have to cram and retain who your group members are. Just know your group. That is Group 1. Group 2 has Bank of Baroda, Bank of India, Cairo, Tropico, and United Bank of Africa. Group 3 has Citibank, ABSA, Postbank, UDB, Stanbic, and Standard Chartered Bank. Group 4 has Centenary, DFCU, DTB, that's Diamond Trust, EcoBank, Equity Bank, Finance Trust Bank, Housing Finance, and Opportunity. And finally, Group 5 has the CIs and MDIs. That is the BRAC. These have the same structures: BRAC, Mercantile, Top Finance, YACO, EFC, Finca, Pride, and Yuga Ford. Those are the 5 groups. So, ladies and gentlemen, let's break. I will request Prosi and Prosi just stand at the bank. As the members, participants walk out, they'll hand you their registration forms. The tea is upstairs. You can take a break for 30, and then we shall be back. Thank you. Just to note that in your groups, you shall be joined by some of the Bank of Uganda staff who are here with us. Thank you. Not all of them. Some of the tables, please carry your personal belongings with you as you step out for the break. Wouldn't want to, sorry, apologies for that, but it will be safer than sorry. Apologies. Just carry your personal belongings.
Thank you for coming back from your break. We are having 5 groups, and the first group, which is group 1, seated behind at the back, we are having ABC Capital Bank, Bank of Africa, Exim Bank, Guarantee Trust Bank, I&M Bank, KCB Bank, and NCBA at the back, this side. Then we have Group 2. Group 2 has Bank of Baroda, Bank of India, Cairo Bank, Tropical Bank, and United Bank for Africa, right here in the center. Then we have Group 3. To my left, extreme left, we have Citibank, Absa Bank, Post Bank, Stanbic Bank, Standard Chartered Bank, and Uganda Development Bank. Then Group 4, to my right, the upper right, we have Centenary Bank, DFCU Bank, Diamond Trust Bank, Eco Bank, Equity Bank, Finance Trust Bank, Housing Finance Bank, and Opportunity Bank. Then when we get down to Group 5, which has the credit institutions and the microfinance deposit-taking institutions, they are going to be seated at the back on my left. We have BRAC, Mercantile Credit Bank, Top Finance Bank, Yako Bank, EFC Uganda, Finca Uganda, Pride Microfinance, and Yuga Ford. Thank you. At the back on my left. Is anyone lost? We are available to guide. Bank of Uganda staff, we have been allocated groups.
Just one more. There's a sweater, a warmer here, that fell along the way as reorganized. If it's yours, kindly let me know, and then we'll have it. Now, we request that each of the groups chooses 1, a chairman, 2, a rapporteur who will be taking down the notes, because we will have presentations after lunch by the group leaders, and then a timekeeper. As you can see, we have 4 subjects that we are going to discuss for the next 1.5 hours or so. It's important that you time yourselves. The first 2 topics, amendments to the Memorandum of Agreement and challenges that you face as PFIs, are the meat. Yeah, they're the real deal. You can spend quite an amount on those, but you need a timekeeper just to keep you on track, a group leader, and a rapporteur. Thank you. the group leader will present, and if you agree as a group, someone else can present. That will be after lunch. It's up to you, really, as groups. we have one group that is wrapping up. They can wrap up. The rest of us that are done can proceed for lunch. Those that haven't filled in or who hadn't submitted their registration forms, kindly do submit them to Prosi. Just wave. Prosi will be picking those registration forms from you. Just give them to her as you walk out. Lunch is upstairs where we had breakfast. There's a room called Katonga Hall. That's where we're going to have lunch. It is ready. After lunch, we have 3 items. One, we'll have a 15 minutes presentation on automation, on the automation of these schemes. It will be 15 minutes. And then we will have the presentations from the groups. And each group will have a maximum of 15 minutes. Those are 5 groups. That will take us 1.5 hours. The automation presentation and the presentation from the groups together will take 1.5 hours. And then we will have a Q&A, hopefully for 45 minutes. Now let's agree. Can we be back here at 2:10? Is it agreeable? Is it agreeable, ladies and gentlemen? Or you want to be back at 2? 2:10? Is that okay? Or 2 o'clock? 2 o'clock? Okay. You have 45 minutes. Please proceed for your lunch. Upstairs to the left is Katonga Hall. You may submit the registration forms to Prosi. She's waiting. Those of you that hadn't. Let's proceed for lunch, please. We don't have a lot of time. Thank you. The groups that's wrapping up 5 minutes so that you can have your lunch and catch up with the rest. Thank you. your very candid discussions. We noticed that you are really engaged. And just like you had, I can guarantee that what was discussed and will be presented later in a few minutes is what will culminate into the revised MOA. So kindly settle in. I want to invite Mr. Sam Chisitu. Samuel is from the IT department at the Bank of Uganda, and he is one of the team leads on the automation of both the ACF and SBRF. He will be telling you what it is they are cooking. So Sam, please. After Sam has presented, we will have the group presentations. And we request that the group presentations be limited to 15 minutes. And thereafter, we shall have the general Q&A. Thank you very much, Sam.
Thank you, Victor. Thank you. My name is Samuel Chisitu, as introduced by Victor. I'm from the Business Automation Department, and as he mentioned, we've been working on a solution that we shall use to automate the operations of the ACF and SBRF, as I am going to explain. So I'll take us through a small background, then the benefits of the automation that we are working on, an overview, then what we expect from you, and then the next steps. So as you are all aware right now, we submit appraisal application, loan appraisal applications, refinance requests, and loan refund information manually through letters that you address, I think, to EDF. And we set out to improve this process such that we can reduce most of these manual workings around. Most of the manual work, so that we can improve efficiency in processing the applications and the different loan processes. So what we aimed for was first to reuse most of the to reuse functionality of already existing applications that you already have at your banks, as I'm going to explain. And also, the other goal was to have to reduce the number of memos that we exchange with you, so that the whole process is more efficient and we can reduce time delays. So the expected benefits of our automation first is to improve the loan appraisal process. Like I said, right now, you're using, you submit applications of who is taking the loan and then the supporting documentation. So we set out so that we have those loan details submitted through a system, and then the documents are handled also through a system. So all this will improve tracking of the status of any application. Then in addition to that, we are also aimed at improving efficiency in handling of refinance requests and loan refund information, as I'm going to share in the overview slide a little later. And then finally, we aimed at creating a data source that will support data analytics for the ACF and SBRF loans. So this is an overview of what our system looks like. Like I mentioned, I'll just for us to go over this, I think the best way is to go over the main processes. So first, loan appraisal. Right now, you submit all this information with printed documents that you send to Bank of Uganda. So with the improvement, we want you to use the bank supervision application, which actually you're already using for submitting finance information to our supervision directorate. So with the use of that system, what we aim for is that you will nominate people at your institutions who will then have access to this system. And when we give them access, we shall only limit them to only view information that is related to these ACF and SBRF loans only. They will not be able to see the treasury information or the finance information as submitted to the supervision directorate. So first, you will submit your loan details through the bank supervision application as showed up there. The same will also go for the refinance requests. So when you've submitted your loan appraisal and it has been approved, you will be notified about that approval. Once that happens, that should then trigger your request for repayment through a refinance request. And that also you will submit on the bank supervision application for our processing. In addition to that, once, so then later, when it reaches time for payment of the loan, that's refund of the loan, you will then also submit the details of the loans that you've made through also the bank supervision application. Right now, I think what you do is you make the payment on the RTGS system, and then you send through Excel, you send us the breakdown of that. So through the bank supervision application, you'll send us that breakdown, and you will also submit the details of the, then you'll make the payments through RTGS. A detail of how all this will work will be explained in a more detailed training that we shall be organizing a bit later. Then finally, also document upload. All these processes that I have explained right now have requirements for supporting documents along with those applications. So we shall provide you access to a transfer system on which you will be uploading those supporting documents. And once you upload them, we shall get them into our ACS system internally, and then that will ease our processing. And then we can get approvals much faster, and then tracking and all the other benefits as I mentioned. So what do we expect from you? What we expect first is that you will nominate people who will be interacting with these systems. Basically, those who will be submitting these applications and also that other information as I mentioned earlier. So once you nominate those people, we will organize a training session where we shall take them through how they will use those systems so that we can receive that information. Then in addition to that, we'll expect you to prepare your operations to enable scanning of documents. From what we learn, most of you have actually already automated this process, and you've automated, you're already like scanning and you have these documents somewhere. So that will then make it easier for us, where you'll just get those documents and upload them to us. Maybe one difference may be that for one application, we may need more than one attachment, because I think some of you scanned one application supporting documents as one document, but there will be need for you to change your operations such that a land title is submitted separately from another approval or other documents as well, so that it can help us differentiate them while we are reviewing the loan application. So again, as I've mentioned, we will also be doing that training. So we'd expect that those people to be available for that session. Finally, our next steps now, what we expect to do is maybe something I didn't mention. We are stress testing the application and the process workflows with the help of 2 institutions. And these institutions are going to help us test the process flow, such that by the time we roll it out to everyone else, we've addressed any potential issues that we may not have anticipated. So as we do this stress testing, that's one of the processes that's keeping us from rolling this out right now, but we hope to conclude this. Once that process is almost coming to a conclusion, then we shall send for a request for people to be nominated, the people to be trained, and then finally we'll go live with this system around mid-April, hopefully. The Q&A session, I think, will be addressed after, according to the moderator's guide. Thank you, everyone.
Thank you very much, Sam. Ladies and gentlemen, just to remind you, we got this while we were reorganizing the room after the tea break on one of the tables at the back. If it's yours, kindly reach out to this table with Sarah and you'll have your cardigan. And now, thanks Sam for a brief and precise presentation. We are going to move into the group presentations. Hopefully, we can use 15 minutes at the most. We are aware that some of the points might be similar, so reading them out either as bullet points, unless you have to add some flesh to it, that's welcome, but let's use 15 minutes so that in the next 1 hour and 15 minutes, we can be done with that part of the exercise and then do the Q&A. So I will invite the representative for Group 1 to please come and do your presentation. You'll introduce yourself and your institution and take it up from there. Thank you.
Thank you. Good afternoon, colleagues. I'm called Ben Meta Aloro from Bank of Africa Credit. This is Group 1. I just present a few points about the discussed aspect of this gathering. We looked at first the amendments that were done under ACF and SBRF. We came with the following observations that I shall just read out. We noticed that there was a reduction in the risk for MDIs and credit institutions from 50% to 30%, and we also propose equal measure to be shared or sent to commercial banks instead of them remaining 50-50, since it is a risk game that all the lenders are undertaking at this point. For the case of the inclusion of the biological assets, we agreed to it. It was good, except we requested for classifications, since the cap was 80 million. The classifications will help a defined cap to be with a proposal of 200 million, taking into consideration some of the biological assets that need a much more bigger capital to look at. And a case in point was cattle fattening. We also acknowledged and are okay with the issue of case-to-case headrooms that could be created for the borrowings that have hit the cap that have been set by BOU. As far as the minimum period of 6 months loan tenure was concerned, we are in agreement, but we also looked at other types of businesses that fall under agriculture, specifically looking at the poultry dealers who might require a shorter period of time for the case of getting return on investment. We acknowledge and noticed that it's also a bit dangerous to leave money in the hands of borrowers for quite a longer period of time when they have initially obtained their mandated return investment to leave to diversion. So we had a suggestion of reducing the minimum tenure to 3 months. However, it can go above that depending on the type of business and the business cycle. About challenges first, by PFIs, in some cases we noticed open acceptance of the board members for the product itself. Meanwhile, agriculture itself is a sector that most lenders look into, but the appetite is a problem to most of the board officials. So we are suggesting that let BOU have further engagement with the CEOs so that this appetite is enhanced. We noticed the few applications that went to BOU had some TAT issues, though there was a fair explanation of the challenges around TAT. However, it also still came out as a challenge. This is a game of agility and also for members to get value out of it so quick. Businesses can't wait. Equally, the lenders also have target to achieve. So if it takes a lender about 60 to 90 days to have a disbursement, and yet if they lend under their own arrangements or terms, it takes them 15 days, it beats the purpose. So TAT is a focal point on both ends here. We also requested under the challenges, most of the lenders or PFIs are not having post-disbursement data. Specifically, we are looking at the data that gives point of view for returns and decline facilities, whereas that information is given, but the decline, the composite decline reasons that could be helpful to majority of the lenders are not clearly spelled out, which makes it quite difficult for the other lenders who are not participating to know what could be the challenge with the entire product. There's a training of the business teams about the product, about ACF, that needs to be inculcated, which is still a challenge. From most of the PFIs, when they are recruiting their staff, they take them through induction process. But ACF product seems to be a product whereby it's only CEOs who are invited for such kind of discussion. Eventually, the small or tiny bit of the aspect to consider while selling this product is not known to the front staff who are facing the potential borrowers. So there's that gap as far as this training is concerned for the case of those who are selling the product. We also have a challenge of triennial strategies that most banks or PFIs set up. We realize that most strategies, triennial strategies, are shared or set up in line with each lender's appetite. But there are very few lenders who have actually agriculture as a sector as far as their appetite is concerned to lending. They will heavily advertise under education or under trade or finance, but you will never hear someone coming up to talk about agriculture and also promoting ACF. That's a big challenge for CEOs who are here. We need agriculture, more so product under ACF, to form part of this medium and long-term strategy for benefit purpose. How do we help in the utilization of UAIS, that is the insurance component of it? How do PFIs help in the utilization? We had suggestions of sensitization of business and credit teams about the agricultural insurance product. We also realized that insurance products, unless a banker, unless an officer asks for it, the information does not come in openly, it has to be asked for. For that reason, we request that let that information be delivered, not to be waited to be asked for first, but it has to reach where it's supposed to reach so that people can be able to benefit from it. From the side of the insurance, we are suggested to improve the uptake or utilization. They need to be able to list the insurable risks and the possible compensation criteria so that lenders can appreciate. What basically we mean is that since 50% of this fund is the liability is on BOU, that means the PFIs have the other 50% obligation to protect. And if the PFIs feel safe with the other 50%, knowing that insurance will cover the 50% or 100%, it gives a measure to uptake and to promote utilization of this fund. In a situation where the insurer says, no, I need to be able to insure up to 80%, then BOU should be able to give priority for the majority coverage to be under the PFIs money for that purpose. Then we also, to promote utilization, also we need to have a clear position on whether the insurer is only taking care of the principal disbursed or it has a component and acceptance of the accrued interest, and that came due to the fact that some of these loans can be under bullet disbursement, more especially for those in crop farming directly who have to first wait for the maturity and sell. If such an asset gets damaged at the point of harvesting and net interest has accrued, how is that interest supposed to be treated? So if insurance comes clearly on that, it also helps to reduce the risk on the lender, that's the PFIs, which can also increase the utilization of the insurance component of this scheme under Uganda Agricultural Insurance Scheme. Under participation in scheme awareness, we have a provision of internal resource to support scheme activities. That's very key. It goes to PFIs. They should be able to have a resource dedicated to that, or as an additional role to a resource that can execute that to drive participation. We have on board in ACF into a triennial strategy, which was already mentioned before. We also have the funding parties and other stakeholders into this ACF funding who needs to come up to be able to support and also provide data. You look at the Ministry of Agriculture is there, that MAIF can be there, but if they don't provide data for identification of these particular farmers or the people who are under agricultural sector, it will be left into the hands of the workings only who have the information. And therefore, the workings versus what is sought or what is looked for could create a big difference if we avail the data of the existing farmers, both at small and large scale. Still to drive scheme awareness, there should be cost sharing. This cost sharing will help in the fact that it will not only advertise the PFIs, the PFI ability to support the borrowers under ACF, but also it will help to promote and enlighten the knowledge about insurance component to the beneficiaries who are the farmers. That can also be another way. There is formation of regional forums to run a campaign of awareness and the resolution of underlying challenges. I'm sure there are existing challenges which we know, but we don't have forums on how to have them resolved. This can be helped with the support of the BOU lead people or person and having regional engagement as opposed to it just being centralized in the current state in which we are right now. Lastly, on this, training of the sales staff for ACF, SBRF by BOU, also that can be at regional level, at different umbrellas, can be UBA, or on a request of a PFI that can support and enlighten the staff who are the main focal point to be able to sell this product. that is it about Group 1's presentation. It's my prayers that we didn't take more than 15 minutes. Thank you.
Thank you very much, Ben. Members, let's appreciate Group 1. That was ABC, BOA, EXIM, GTB, I&M, KCB, and NCBA. Let's have Group 2. Group 2 has Bank of Baroda, Bank of India, Cairo, Tropico, and UBA. Let's have a representative, please. Group 1 used 10 minutes and 48 seconds, and we appreciate your timekeeping.
Thank you so much. Good afternoon, everyone. My good name is Jamil Ndiang from Tropico Bank. Yes, Jamil means something good, so that's why. It's a pleasure to be here. I'm here to represent the ideas of Group B, and I'll make this interactive. Group B, feel free to clarify on anything that you feel I've not brought out properly. In our deliberations, among the proposed amendments on ACF, we proposed of scrapping off the limit for biological assets. It's really limiting, especially for cattle fattening clients, where you find the minimum cost of each cow is like 2.5. So giving someone 80 million is very discouraging, and a number of financial institutions have lost such clients because of the limit. Then we proposed of including tree planting as one of the areas to be financed under ACF. Why? We looked at this for those clients who are already in the area of agribusiness. Someone, for example, is engaged in agriculture, already has a business that is running, but wants to expand by venturing into tree planting. We should consider it, given the fact that there are some trees that have a gestation period of like up to 3 years or 2. So that should be also considered under this arrangement, because previously it was excluded. Then we also proposed of including the option of refinancing or buy-offs. You realize that you find a client is challenged somewhere in their financial institution but wants to get money from you, and they have a running ACF. Well, the terms have not been laid out clearly. However, we propose that this is properly documented, and then the terms included, as long as the clients are performing. So that is one of the proposals that we came up with. Then proposal is to expand the composition of grain trade. Grain trade currently has maize, soybean, but we proposed that this should be expanded to include other crops like coffee, cotton, matoke, and so on. Then we also propose that financial institutions should be allowed to write off their 50% contribution and then provide for only 50% through the normal process of writing off, as Bank of Uganda pursues the other arrangement through Parliament and so on. For us, we should be allowed to do our provision for the 50% to reduce on the TAT there. And then another proposal that we came up as Group B is including financing of acquisition of land. Currently, in our ACF, we don't consider acquisition of land. However, we looked at it as an opportunity to include it there because there are some businesses that really, they are in agribusiness and their objective to acquire land is to expand that same kind of business. So there is no need why such clients should not be considered as long as they are in that line. And then also, we proposed of coming up with an MOA, an agreement for insurance scheme. A number of us have gotten to know about insurance here, and we propose that we also do an arrangement like ACF where there is an agreement with the properly laid down terms and conditions of insurance. We need to know the kind of risks that are insured and other terms like pricing, because the price for ACF is well stipulated 0.5 on other fees. So we also need to know what is involved under insurance. And then also, lastly, our proposal in the amendment was to revise the interest rate for block allocation to 15% and other fees to 1%. Why? We have realized that one of the things that are affecting uptake of block allocation rather, is the cost of monitoring these small loans is high. We invest in a lot to monitor, to appraise. However, the return currently is still low, so we propose this should be revised. Maybe it would encourage the financial institutions to explore more in block allocation. Those are the amendments that we proposed of. My team members, is there any other that I've left out? I think I've tried to exhaust them. Then when we go to the challenges in implementing ACF, one of them was the limited awareness, especially on insurance scheme. As I said, some of us got to know about the insurance arrangement here, to be honest. So, and there are a number, as Group A said, that the staff are not well sensitized. You organize workshops and sensitize the CEOs and the rest, but these front staff are not properly sensitized. So we realize that limited awareness is one of the challenges affecting ACF and as well as the insurance scheme, uptake of insurance scheme. Then maybe lengthy process of writing off the non-performing loans under ACF. Then the high cost of monitoring block allocation, and then the stringent collateral requirements for small farmers. Those are some of the challenges that we explored that have affected ACF generally. If I'm to go to how the insurance can be utilized by financial institutions to increase uptake of ACF, we came up with a proposal just to specify, to come out clearly on the terms of this scheme. That's what's all that we need. We need to know what exactly is under the insurance, what is insured, the pricing, the risks, and all that, so that we can properly take up this arrangement. How financial institutions can participate in the scheme awareness campaign? We looked at, we recommended BOU to carry out regional workshops or trainings. You continue, like a similar workshop should be organized maybe region-wise, and the participating financial institutions invited, like their different staff, invited for such workshops to learn more about this scheme. Well, these workshops have been happening, but we felt that financial institutions were not properly involved, especially at regional level. So we proposed or recommended that in order to increase the uptake, the awareness rather, financial institutions in those different regions should be involved. Then lastly, we recommended that Bank of Uganda should print out some materials and distribute them to the financial institutions in form of flyers, simple materials with information about ACF, Small Business Recovery Fund, so that we put it in our banking halls, for example, and the rest of the places where clients can easily access them. That will contribute to the awareness of these schemes. Otherwise, that's all that we had as Group B. I want to thank you so much for listening to me. Unless if there is anything that my members would like to give out, I would like to end here by wishing you a wonderful afternoon. Thank you.
Thank you very much, Jamil, for that presentation in 10 minutes as well, slightly less than 10. Members, let's have Group 3. Group 3 had Citibank, ABSA, Postbank, Stanbic, Stanchart, and UDB. And let's have their representation.
All right, good afternoon, colleagues. My name is Margaret. As a Kenyan, I do head the agribusiness for ABSA Bank Uganda. I'm the nominated chair lady for Group 3, representing ABSA, Stanbic Citibank, UDB, and Postbank. So a group discussion on amendments to the ACF scheme. The first point was on the block allocation. As a group, we agreed that the 1.5 billion allocation cap should be doubled to at least 3 billion to enable us to extend credit to the SMEs. Secondly, in terms of enhancing the limit, the 20 million cap should be revised on an individual basis to at least 50 million for an individual farmer or an SME in the Greek space. And also we looked at two separating criteria for the individual and for the CBOs. We do appreciate that we have a number of cooperatives or groups that are working together that can actually benefit from the block allocation. So in our group, we suggest that for the individual be increased from 20 million to 50 million, and for the CBO increase from 20 million to 200 million. The CBO would definitely be defined at the assessment process from each respective banks. The second amendment was on the Small Business Recovery Fund. We do thank the management of the admin for pushing the amendments that came through in November 2022. However, we did increase the loan tenor from 100 million to 200 million. The biggest challenge we got that is hindering the drive is on the turnover covenant. For sure, members, if somebody borrows 200 million, do you expect the turnover by the end of year to be 300? That will be an automatic default. Ideally, the turnover should be 3-4 times more than the loan exposure. So we urge that the turnover threshold should be enhanced to enable us extend credit to the small business and recovery team. The next point of amendment to the scheme, we looked at the recovery process that currently involves the Auditor General and the Parliament, and also clear timelines are not defined. So our proposal is that one, to have very clear timelines on the recovery process from the time the PFI or the lower tier members do submit their claims. What is the timelines under which the recovery process will be concluded from the admin perspective? The second issue is to try and change the governance process. Auditor General and Parliament should be removed from the process, and Bank of Uganda admin given full powers to make a decision. However, for the purposes of audit, the Auditor General can then come in to audit the administered team under the Bank of Uganda periodically. It can do it annually, quarterly, whatever they need, but they need to get out of managing the micro process of recovery. That should be left fully under the ACF scheme. The other amendments that we suggested as a team is uplifting the maximum eligible amounts. One, on the non-grain, currently we are running at 2.1 billion, that's the 50%, but we seek that to go upwards. Members, you bear me right, for you to put up a processing plant, for you to do commercialized agriculture that the president is now pushing for under the MAIF programs, we are talking about mechanization, but we cannot push a commercial mechanization at 5 billion. We do accept that you have put a provision of exception approval, but an exception approval becomes irrelevant if you have so many cases all the time going for exception approvals. So we seek to lift up that from 2.1 billion to 10 billion as a 50% contribution, and also the grain facility to be enhanced from 10 billion to 15. Reason why? We all know that by the time the scheme, the grain scheme was put up, maize was costing at 800 shillings a kilo. But as we speak today, the market price is about 1.5, 1.6, 1.7. Does it still make economic sense to retain the 10 billion cap? So we seek that should be uplifted given the economic situation that we are facing to enable us support farmers. My colleagues in group 2 and 1 did speak about remove of the cap limit on biological assets. We do agree with that. The other suggestion, as my colleagues in Group 2 were talking about increasing the interest rate. In our group, we seek to increase the Bank of Uganda contribution from 50 to 70%. Increasing the interest on the SME will be a stretch because already we do realize that the cash flow perspective and encouraging of farmers, we need to give them affordable rates. However, the cost of monitoring is high. The cost of fund for long-term investments is very high. Even with the 50%, releasing money at 12%, when the cost of fund is higher, doesn't really motivate PFIs. So we seek that should also be considered as the same way we are considering it on the lower tier. Even the PFIs need the contribution to be enhanced from 50 to 70%. The other issue was the turnaround time. The MOU speaks about 14 days. We do applaud the team that of recent we've seen a significant improvement, but it's still a problem. Why do you need 14 days to approve a loan if the PFI has done a proper due diligence to appraise and approve this facility? We still believe that this should actually come down from 14 to 7 days, and considering the digitalization that is being proposed, that we should have a bare minimal TAT so that we can be able to serve our customers. The other suggestion was the working capital to be opened up to other commodities. My colleagues did speak about that. So those were the suggestions to the MOU. The second point on the challenges faced by PFI in implementing the ACF, we did mention on the turnaround time. That has been a loud cry across most of the PFIs, but we applaud the team that we've seen a significant improvement. And thanks to Bank of Uganda IT for coming up with
For Group 3? Thank you. We will be hearing from Group 4. I have a little announcement. There are some of you that had to dash out to office and missed your lunch. The lunch has been kept for you, but we need to clear the room. So please dash out now and have your lunch now that you're back, before it's cleared up in the next 25 minutes. Thank you. Let's hear from Group 4. Group 4 had Centenary, DFCU, DTB, EcoBank, Equity, Finance Trust Bank, Housing Finance, and Opportunity.
Thank you, Chair. I'm William Kayongo. I'm a Senior Manager, Enterprise, DFCU Bank. Chair, by the authority given to me, allow me to say I recommend all the amendments by the first 3 groups. That's the presentation from Group 4. Okay, I wanted to see those people who are sleeping, but I know everyone is alert. Group 4, these are some of the recommendations that we are able to review. The first one, the participation of MDIs, the 50-30 rule. This should apply to other financial institutions, and the fact remains of financial an arm of the micro lending. So the same should on biological assets. The group is of view that we increase this to 500 million, and the reason is based on the current economic dynamics and the trade between these special biological assets. And we thought it wise that with 500 million, some of our participating farmers should be able to expand their farms, other than limiting it to only 80 million. Be more clear on the grain aspect, separate the grain trade and production, and then even the naming should change to trade in agro products. So that is very clear, so that we can accommodate all other value chains that are associated with grain. The cost of the loans, we are of the view that the 0.5% is a little bit limiting, given the fact there is an incremental cost on the cost of monitoring. The group is of the view that you increase this to 0.75%. I know some of our members in other groups have requested to increase it to 1%, so that it can make some economic sense in the aspect of the bank. The land purchase, we are also recommending consider purchase of land, especially for expansion, but we are limiting this to the vicinity within your current area of operation. And that's why we are saying if we open it up to everyone, we don't want someone to come, is purchasing land in Iganga and the farm is in Imbarara. Can you try to first look at what you are expanding now, so that it can make some business sense? And also we capped this to a maximum of 50 million. We don't want to become real estate dealers because you are expanding land. Forestry, of course we are informed by BOU that we have the SPGSS under the Ministry of Water and Environment catering for this. We are of the view that that said it's still under the Ministry of Water and Environment. Forestry should also be considered, especially where farmers have demonstrated of existing credible cash flows that can support the repayment of these facilities. Because if you look at some of the parts within Uganda, there are some farmers that have actually been very aggressive in the regard of forestry. The refinanceable amount of each PFI of 10 million, the group say this should be dropped off. Reason being, there are a number of delays when you are looking for a number of different clients to put under this docket, so it delays the process, so we recommend this to be scrapped off. A review of the steps followed under the write-off. Of course, we recommended that let BOU have a workshop in regard to these steps, and also we gave mandate to BOU to be able to manage the fund other than referring ourselves to the Parliament of Uganda to make direction on this. This is a little bit political, but we have confidence in BOU to manage the fund and make the right recommendation for the parliament. So you don't need to drag the financial institutions into this. Of course, digitalization of the process, we are excited and delighted that this is taking course, and we expect that we expedite this process to improve on the turnaround time. The challenges, of course, one among the challenges we noted the signing mandate. It's limited to a few people within financial institutions. If we can be able to expand it to a number of people, we recommend for the sign-off of the promissory notes so that we improve on the TAT. One member also stated that we need to recognize the participating institutions so that they have the zeal and the momentum. I don't know if we can recommend to have the ACF awards at the end of the year so that we say Bank of Uganda Gavude under ACF. Those are some of the things that we can think of to have that boost. Then the cost of loan requirement, we also thought it wise that some of the costs are a little bit higher when it comes to the requirement like project plans. We have the view if we can have a cap on this so that we can say that at a maximum of 100 million, you require to have a detailed project plan. Because you know the farmers that we are participating, they don't even know what a project plan is, but it's a requirement. Turnaround time is still an issue, but we also appreciate the fact that of recent there is an improvement in that aspect. But with the automation, we know that this will improve further, but we also plea and adhere to this turnaround time that has been recommended of the 7 days. Allow top-up opportunity. We have some extraordinary farmers that have actually been able to harness through SCF. Let's give them an opportunity if we see that their projects are actually giving value to the communities where they are located. Let's give an opportunity for them to have that top-up opportunity. Then in terms of engagement, let's have this engagement on biannual process so that we can have the participation and hold each other accountable as our funder and also as financial institution. In regard to the scheme, my group was very open that it's about the awareness. Many of us got to know about some aspects this morning, but if the awareness is kept on, we have the view that this can actually improve the participation, increase also the participating insurance companies. The group says that the companies participating are limited. Then have a clear tariff distributed within the different financial institutions. So it goes back to the awareness. Under SBRF, clear credit on the turnover in terms of the assets and sales. I think the 300 million only mentioned the sales turnover. Clarification on the refinancing under NPS. We need to be very clear at the time when we are refinancing the NPS, if they are able to have the same classification as per the FIA or as per the accounting standards. So this needs to be very clarified so that we are aware. At the time of classification, we need to know whether we are going to maintain them as NPS or we can, after a period of time, we can have them uplifted. Lastly, on creating awareness, we need to have internal campaigns within our financial institutions. We noted that as financial institutions, we are very particular to particular branches that are actually lending out SCF. So internally, it goes back to us as financial institutions, make awareness within our branches. We also said that Bank of Uganda is very dear to us. We are recommending to penalize financial institutions that are not participating because this is something that government has come up. You have signed up the MOU, but you are not participating. So the group is of the view that such financial institutions are penalized. Open up the SCF to all branches. This goes back to financial institutions. Of course, the biannual engagements, that was mentioned. Then BOU, when you are going out to the market, we also recommend that try to contact all the financial institutions that are participating in those regions so that they are part of you to create awareness, and also for the farmers and any other person interested to know that we are able to extend this financing. Then have a review of the MOU after 3 years so that we can work in hand with the different economic changes and even the opportunities that might be existing. Thank you very much.
Thank you, William, and your team. I am particularly enthused that you managed to wrap that up in 9 minutes. Why? You had the largest group. It even had 5 tables. Point we thought that group should have. And the team. And lastly, ladies and gentlemen, is group 5. And this is composed of the credit.
I think we were listed as the smallest in this group. We are tier 3. For the amendments of the ACF, we see that one was excluded, and we recommend its inclusion. The other one relates to considering only the grain trading, and we actually, like the rest have mentioned, we said let them look at the entire value chain and also consider other commodities besides grain. We also saw that there was limitation not to refinance existing loans as it is in the SBF. So we felt that this should be considered as well. There is risk sharing for the grain trading, which is 50-50, whereas the other is, the ratio is 30-70. So we recommend also that be harmonized to 30-70%. As the rest have mentioned, turnaround time was an issue that came up. I won't labor to go further on that. It has been mentioned in the other groups. The other observation we had is that we weren't sure how the 0.5% processing fee was resolved in the proposal, and we felt that there operate other administrative costs that are incurred, especially in processing agricultural loans. So we felt that in light of evaluating the processing costs incurred by various institutions, so that we come up with a right cap on the processing fee, we recommended 1%. The challenges to the SCF, again, we said 14 days should be reduced to 3 days. And as I earlier mentioned, also revise the processing fee cap to 1%. On the SBRF, we agreed to the recommendations, to the amendments. However, we looked at the issues of pricing, which is not very attractive, especially where operation costs are high. And we felt that this is something that should be looked at and revised. The other aspect is banks are risk averse and bringing on business limping affected by COVID-19 might be a little challenging. Actually, we recommended that instead of looking at screening all businesses, we felt that all businesses were limping after COVID and they should be considered under SBRF without limiting them to aspects of turnover and all the other qualifying criteria, since it is only one-time access to these loans. In terms of participating, in terms of PFIs to participate in the scheme's awareness campaign, we recommended the following: monthly reminders and updates on the benefits, Bank of Uganda to sponsor marketing and promotional campaigns, and also to use the appropriate channels and language. Why we came up with this, we were told that at times adverts are put in the newspapers, and we felt that most of our target market don't read newspapers, so we look at alternative and appropriate channels to reach out to the masses. Mass messages in different local languages should be organized, and also workshops like this. And I know other people have recommended penalization, but for us, we are looking at giving targets to participating financial institutions so that they can be stretched in order to communicate the benefits of these initiatives. Again, financial literacy is something that came up in our group. In terms of insurance, we echo the same observations like the rest. Awareness is key. And also, members observed that the claims processing in insurance is something that needs to be looked at. And also, although insurance encourage their customers to have utmost good faith, members felt that on their part, they don't illustrate that utmost good faith when it comes to compensations. So they need also to be very clear on what is excluded in terms of policies. Otherwise, they take their time when it comes to compensating. Thank you very much.
Thank you very much, Robert, and the team in Group 5. And just to shed some light, Robert, you are not grouped because you are the small fish in the pond. No. The grouping actually followed the reasoning that the business models from our view were a bit similar. So when you start to discuss, you'll be able to be easily on the same page and understand each other. So it wasn't necessarily size of institution, just to shed some light. Thank you, ladies and gentlemen. You really have helped me keep the time, and I hope that in the next 45 minutes, we can wrap this up. That will certainly depend on the Q&A. We are going into the question and answer session now. And I will invite the following people to sit on this table, the high table that we had earlier on in the morning. We have the Executive Director of Finance, Mr. Richard Biarugaba. In case there are any really high-level questions, he can take those. Then we'll have Winnie, the head of ACF, Sarah, ACF as well. We'll have Patricia. Patricia is from the bank's legal department, Bank of Uganda. Alfred Kurong is from the supervision department. And then we have Angel from the insurance side of things. Angel, please join the team here. For all those I've read. And for those who are coming onto this table, I prefer that your chairs face the team. Now, I will request Bank of Uganda staff hands. Bank of Uganda staff, yes. Let's have ACF staff in particular. ACF, please be arising. You're going to help me move those microphones around. Sound, please help us with the mobile microphones. We are going to take 5 questions at a time, and then any of these can answer them. They see necessary. Any questions? Oh, Sam. Where's Sam? Sam, please join them. Sam presented on automation. Sam, please join them.
Good afternoon. My name is Jimmy, Equity Bank. On ACF, I noted that you presented very huge numbers. I think 700 billion. Maybe it would be good also to share the claim payment history annually, because I think that is where the issue is.
Thank you. Ben Meta is my name. I have a couple of questions. In terms of lending single obligor limit, if a borrower or an entity has maxed its single borrower limit, does ACF or BOA expect PFIs to syndicate such facility, or the excess is referred to as BOA portfolio? The other question is about block formation. Whereas it's a good idea, the mechanics to form the blocks was not described. So a number of us are wondering if it is going to be self-formed blocks who will approach the lenders in order to benefit from the block formation, or it's the responsibility of the PFIs to collect individual borrowers and entities to form the blocks in order to submit to BOU. There are some intelligent borrowers who love to repay their facility ahead of time. In the earlier presentation from Winnie, we didn't see anything to do with early settlement, or it's at zero consideration. Finally, under ACF, the write-off process still remains unclear as far as the funding is concerned. There have been some indications that it has to be approved at parliament level, and there has been some information that it has to be approved, and then that's when the PFIs can be equally compensated in the risk manner, and yet these funds are expected to be written off in line with FIA guidelines, but the agility for the PFIs to get return or refund of their portion, which has been written off, is not so clear. So we expect the post-disbursement to do with the non-performing facility, specifically write-off, to be well alluded to for purpose of managing the process thereafter. Thank you.
Thank you very much. There's another hand. I'll take that as the fourth question.
Thank you. My name is Francis Sansa, Agribusiness Manager, Equity Bank. Mine is going directly to the new platform that is coming on board. We are really excited and waiting to see how it works. However, did it put into considerations the number of documents we've been submitting to Bank of Uganda? Because my opinion is financial institutions are a big eye for central bank. So what the financial institutions see should not be the same documents the central bank is seeing. Can it identify the core, like 3, uploaded approval? Maybe for issues here and there, the audit team should come on board. And again, I want to add a stone or a point on giving Bank of Uganda the authority to manage this fund. Why the Parliament of the Republic of Uganda, when we have central bank supervising bigger funds? What is the ratio of ACF in relation to the funds that are given by financial institutions? I believe if we do the way we did, where we gave financial institutions a chance to give and then we go and check on a sample basis, it can as well give a push to the fund. Thank you.
Thank you very much. Can we have one more? Any on this side? There's one from, okay. We'll take those two. His and one from ABSA.
Thank you so much. My name is Ali Rwanga from Finance Trust Bank. For me, I need to have some kind of clarity on provisioning and classification for SF facilities. Given the procedure for claiming that is currently there, you know, when we are disbursing these facilities, we are using the FI guide and maybe the MDI guide on provisioning. Now, when you take a claim to go through all that process, you see the banks are incurring a loss. And for us to have a procedure to take before banks can be reimbursed, we need to have some kind of clarity. And to make this a little bit attractive for banks, how are you harmonizing the FIA in regard to the regulation in the MOU that we have?
Thank you. My name is Gideon, Bank of Africa. Mine is going to the insurance company. Earlier they had presented that there's an alternative collateral, especially for smallholder farmers, provided by the insurance providers. I wanted more light on that to give clarity on what collateral. Is it a policy or something that they could give more light on?
Thank you. Let's have the last one for this round.
Thank you, Margaret, once again from ABSA Bank. Mine goes to the ED Finance. This is regarding the grain facility. We did receive a circular some time back allowing financial institutions to extend up to 5 billion, being cognizant of the fact that we are in these are harvest season related crops and being mindful of the turnaround time, but that is silent. We need to hear about that. And secondly, in terms of giving the financial institutions mandate, if ABSA, for example, is comfortable with the client, is it something that we can be able to extend credit on commercial terms subject and the interest revised downwards to ACF upon approval so that we can manage our customers. It's quite painful to wait for an approval when there is a season, there is an activity that has to be funded. So we seek your guidance. One, if we can, if that is still in place on the grain. Secondly, for the other non-grain items, if we are to continue the way we are, whether we can be able to extend credit on commercial terms and clearly articulate that to the lender that upon receipt, to the borrower, that upon receipt of the BOU approval, we will revise the pricing downwards. Thank you.
Have that when you are responding, if it is well, you can kindly arise and give your response so that the guys at the very far off can see you. So Winnie, coordinate the table on the distribution of questions and see what you can take and what else can be taken by the rest of the team. Apart from those that were very specific. Let's have the microphones here. Thank you.
Thank you. I think Alfred, you will answer to the issue of provisioning and write-off and classification of the loans under the ACF. Sarah, you will talk about the single obligor limit. If the borrower has exhausted the single obligor limit, can they do syndicated financing? Can the banks pool resources together to extend credit to a single borrower? I will answer the question on early settlement of the loans and whether the memo or the circular on the 5 billion cap for grain is still in force, and whether or not we can actually extend that to the other financing aspects under the ACF. Maybe let me start with myself since I have the microphone. There was a question about the repayments. I don't know whether I got it right. Was it about the claims or it was about the repayment of these loans? If it is about the repayment of the loans, I will note that about 60% of the loans that have been extended have actually been recovered. So ACF has actually had a very good recovery rate. Currently, we have about 1.4%, the NPL ratio of the government contribution outstanding. So the recovery rate, it has been good, and so for that I commend you, because this goes to the processes that you undertake, but also that you're willing to work with us to make sure that the scheme is successful. The early settlement of loans, yes, we absolutely, we actually appreciate those that do pay off these loans. So yes, you can actually settle the loans. If a borrower has paid up the loan, please, you are expected to pay off the 50% component back to BOU. If you actually noticed in the ACF MOA, there's a provision for a penalty. If we find that you have actually recovered the money and you have it, you haven't remitted it, there's a 15% penalty. So you are expected to recover and remit the 50% portion to Bank of Uganda, even when the borrower has paid off the loan before the loan period has been exhausted. Whether or not the 5 billion memo circular is still in place, yes. That was a circular by the governor, so yes, it is still in place. You can actually appraise and disburse 5 billion to the borrower before you get BOU approval. Although we have had in certain cases where banks still want us to give them approval on top of the circular. And our response has always been, we already have a circular in place, so you can actually disburse up to 5 billion before BOU approval, as long as you have done the necessary due diligence. Whether or not we can actually extend, I think in practice we have actually been doing that, because ACF is a refinance. So provided that you have done the due diligence, you can actually lend before you come to BOU for approval, provided again that, I think the issue here is whether you have done due diligence to the extent that you're comfortable to lend before you come to BOU. So yes, this is the same. It can be extended, and it has been extended. So maybe this will come out through the review, just to put emphasis on it. Thank you.
Thank you, Winnie. I want to address respond to the first of all to the question of the block allocation that was created, that was raised. It is true, we have the block allocation arrangement. However, we did not specify the nature of the block. That is up to the PFI. You could group any kind of farmers that you have come across, or any kind of businesses. You can have a grain customer with a person dealing in cattle fattening and another one dealing in crop husbandry, as long as the total amount that the borrower wants is below 20 million. And the total block that we are talking about in this sense is that in any one application, you should never submit any block that is bigger than 1.5 billion. However, in the time we have been running this scheme, we've never even received a 1 billion block allocation. So never mind whichever borrowers that you have come across, you can still block them up, group them up. A block is any group that is beyond 2. It cannot be a block of 1. It has to be beyond 1, and then you can group them and submit. Maybe for now, let me first pass it on to Alfred to talk about the write-off.
Yeah, thank you again. I'll talk on provisioning and the classification and write-off. My name is Alfred Kurong. I'm from the Supervision Directorate. As supervisors, we are usually passionate, not passionate really, but we are very strict to ensure that institutions write off facilities, of course, which are not performing. But of course, now this is another scenario where facilities need to be written off, but there are circumstances that do not warrant writing them off. On the issue of classification, we adopt definitely we adopt the FIA in the classification, and the IFRS is only relevant when it comes to preparation of financial statements. But as far as reporting to Bank of Uganda is concerned on statutory returns, institutions should stick to the FIA. On the issue of the write-off, I think Margaret was very passionate on the need for BOU to assume, to own the process and remove it from Parliament and the government. But you see, That's a little bit tricky because these are our bosses. And the reason I think, the reason why Parliament is involved is that these funds are from the taxpayers. They go to the consolidated, they are obtained from the consolidated fund, and it's only Parliament that can authorize the right of assets which are deemed recoverable. But of course, as you have proposed, those discussions can still be taken up as to whether Parliament or government is still agreeable to give that mandate to Bank of Uganda. But in my own view, that's a very long process because it may involve amendments of certain acts or provisions of the law, like I think the Finance Management Act, Public Finance Management Act. So I think that is rather long. The practical way is for financial institutions to write off the portion of credit facilities which are funded by the institution, because the board of financial institutions have the mandate to allow write-off of those facilities as long as they are confident and very sure that they cannot be collected. And of course, as long as they meet the criteria which is specified in the Financial Institutions Act. And I think maybe just for information, the portion that relates to the funding which comes through Bank of Uganda may not be written off. First of all, because of that process, and of course, even the regulation allows Bank of Uganda to defer right of certain facilities as long as there are justifiable grounds. I hope probably what I've said will clarify on the matter, and if there is any question related to that, we can still, I'm still ready to respond to. Thank you.
Thank you for your query regarding the automation. Your question was in regard to whether we've considered the number of documents that we shall be uploading as supporting documents. The direct response is yes. The platform we've put in place has catered for whatever size of, first in terms of size, whatever size of documentation, we should be able to take it on. Then secondly, we are not limiting on particular documents, and in other words, regardless of the documents that you send us, we shall be able to accommodate them. In fact, we have put in place a situation whereby the person reviewing the appraisal request, the loan application appraisal, they can request for any supporting documents during their process of reviewing, and the PFI will be able to upload that document as long as the reviewer requires it or they want to have a look at it. So I hope that clarifies your query.
All right. Hi, everyone. I'm going to answer the next question, which is about how insurance serves as an alternative collateral for smallholder farmers. So how we work with the financial institutions is that we normally bundle up agriculture insurance services with the agricultural loans that are provided for farmers. And this gives PFIs more confidence to actually give out these loans to farmers that need them. And we normally have some sort of either special arrangement with the financial institutions to have insurance services embedded in their agricultural loans. Yeah.
Thank you very much. I just wanted to add on to what Alfred mentioned, and because somebody said that we need to harmonize the regulation under FIA on provisioning and classification, and with that, the MOU requirement. So, as I mentioned earlier, that is something we are looking at. Like Alfred has said, we are actually going to harmonize so that the banks don't have to write off, even provision 100%, but can only provision for 50%. And then the other process, it doesn't take away the process. The Auditor General would still have to verify and Parliament would still have to approve, but then the banks can only bear 50% of the loss. I want to talk about whether we can accommodate syndicated financing. Currently, it is not something that we have seen or even accommodated, but it is something that we can take into consideration. The issue, because provided that if the lending banks have harmonized certain aspects like collateral and all the other risks involved, I don't see why it can't work. So it is something that we are going to look at and possibly consider during the review of the ACF. Thank you very much.
Thank you. I don't have anything to add, but just to re-echo what Alfred has said, there is a Public Finance Management Act that governs public funds. So any funds that are appropriated by Parliament from the national budget can only be considered for write-off by the same authority with the recommendation from the Auditor General. Since we started in 2009, we have not written off any. We have given a chance to the PFIs to continue with the recovery efforts. Auditor General recommended one facility for write-off, but you know, sometimes the political temperature is not right for the minister to go to Parliament to ask to lose money when actually the country doesn't have money. So, and it was little money, I think it was 18 million. So that process, we take your point, you want us to manage it, but then there has to be a review of this Public Finance Management Act that requires public funds to be the responsibility of Parliament, to be shifted to Bank of Uganda. And this is not a low-hanging fruit, but we'll try to raise it with the Auditor General when he comes for his annual audits. This one we can pursue as we do the amendments that are very easy, that are within our mandate, as we wait for this political engagement. Thank you.
Okay, thank you, panel, and thanks, camera crew, for helping me. Despite analysis, you don't have to stand up. You can clearly see them. Let's have the second round of questions. It's 3:45. I really wanted to release you latest 4:20. Let's have the second set of questions. We have hands this side. We have two hands here as well. The microphone is this side. Let's have that person him. We have another behind, and then we'll move.
Thank you. My question is on block allocation. Oh, sorry, Jamil is my name, Tropical Bank. On block allocation, when we are submitting these applications for approval, do we include individual requirements of the borrowers? Like if we are to give 20 million totaling to 1.5 billion, those are 75 applications. Do we
specify requirements per applicant, or it's just a list? Thank you.
My name is Mark from Housing Finance Bank. My question is still on the documentation. Can't BOU come up with a few documents, given that the bank has already approved this file? Can't they come up with a few documents to cross-check, as opposed to submitting from the records, valuation report, you're submitting the IDs, you're submitting the business plan, you're submitting, can't we? Because afterwards, you notice that Bank of Uganda comes back to audit. They send auditors to come back to the bank to audit the same files they have at Bank of Uganda. There is something that affects, because it is a lot of work for us who are doing the work at head office. I submit.
Thanks for the presentations. My name is Sulabanan from NMG Uganda. Just three questions. One to BOU. The culture facility has been around for 14 years now, but could you explain to me the potential impact of climate change on the funds? Asset risk, default risk, and even liquidity risk in a situation where weather patterns are more unpredictable, even for the small farmer in the village. And then two, what is the biggest amount of money that the agricultural facility has lent out to a single farmer or group of farmers? And what does this say about the growth opportunities in the agricultural sector itself? And then three, does do you have an idea of the connection between the kind of business that the agricultural facility does and this impact on poverty rates in the agricultural sector? For instance, if you lent 100 billion shillings into today to the agricultural sector, how much will that impact on the underlying poverty rates within the agricultural sector in this country? Thank you.
Thank you. I'm Richard from Centenary Bank. Mine is on automation. First of all, we are very happy on the shift that is coming in the documentation process. It will help us a lot in solving the clerical work that we currently do at the banks. What I would like to know, just to manage my expectations, I saw quite a number of systems that you listed there. Looks like the loan appraisal will be uploaded in another system. Refinance request will go into other systems. I saw BSA, MFTS, RTGS. So I wanted to know, are we going to have one system, like with one login credentials, or we shall have a number of systems handling the same work with different login credentials? Thank you.
Thank you very much. Good afternoon, ladies and gentlemen. My name is Stefan from Centenary Bank. Mine is about the writing of process still. When you look at the writing off as per FIA guidelines, you'll find that if these facilities have reached time for write-off, most of our core banking systems are designed in a way that we cannot split the amount which is due for write-off. Like if we are to write off half, 50% of BOU fund and 50% of the PFI fund. So meanwhile, the application has been tabled to Parliament during that period. Does it mean that writing off of these facilities, even when they are due for write-off, will be deferred for a certain period of time, such that by the time Parliament approves is when we can actually write them off? Thank you very much.
Yes. From this side, I'm Omala Mika from Opportunity Bank. I think my colleague from ABSA spoke about something that I think I would also like to echo. I think she sugar-coated it. I want maybe also to hear from it. Of course, some of the clients are flexible, and we also have flexible systems that can manage movement of interest rates up and down. Now, some clients would be very rigid and they will say, I'm waiting for approval from Bank of Uganda. But there are those who are willing to take a higher interest rate, then you bring down the interest after approval. Of course, this has an impact if you send the case to BOU with a higher interest rate and that mention of flexibility of change, it will affect the process. How I wish we make that flexibility if there is an agreement between the PFI and the client to go under the normal rate, then after approval, we move down to the rates prescribed under the agreement. At least there are some clients who would rather take a higher interest rate just because they are getting that money there and then. They would rather say, I'm going for the normal rate, even if you market for them the benefit of ACF. They would, as long as you tell them 2-3 months, they will say, no, give me the normal rate. It's okay, I'm okay with it. But if that flexibility was there, where we would make the disbursement for those who are willing, then we adjust the interest after approval. I would request we consider that in our amendments and just put that flexibility. Thank you.
Let's have that one more, and then we respond.
Okay, thank you very much. Good afternoon to you all. My name is Angela Ndaula, Housing Finance Bank. And mine goes to the IT expert. I'm just wondering that as you were developing the system, did you involve the partnering financial institutions? Because, of course, when it comes to IT, there is going to be integration, and then integration with our systems. And of course, there are concerns around security, because naturally, if you integrate with another system, that means you have access to probably the whole bank database. And how is that going to work? Where are the liabilities falling in case of issues like fraud? Fraud resulting from maybe a lapse that came from the system that is integrating, you know, that kind of thing. So I'd be very interested in knowing how that is going to be handled and whether you worked with us, the partnering institutions, while developing your system. Thank you.
Thank you, Angela. I think this will be the last round, actually. Seeing that it's 4 o'clock, is there any other so that we take it here and now? There's none. Okay, let's have it as the last one and have it responded to.
Good afternoon, my fellow members. Sarah Makoha is my name from Bank of India. My question goes to the agriculture insurance scheme. The truth is, I've not understood the whole thing. Even when they were trying to respond to the question that was asked, I didn't pick anything. My question is, a PI is going to get, are we going to have an insurance policy like is it going to be like a collateral to the PIs? Are we going to get an insurance policy like from an insurance company that this and this has been insured? And if yes, who is going to be the first loss payee in case of default? That's my question.
Thank you, Sarah. Angel, will say something about generally the insurance model. Now, before the responses, Winnie, Bernard, as usual, asked some very, very technical questions as a finance and business journalist from the East African. I know that from the Bank of Uganda perspective, in our strategy generally, there's quite some cover on ESG and all issues to do with risk, climate risk. And this Friday, we will be having the Sustainability System Certification Initiative, again here, on issues to do with sustainability and risk. I know and I can see that this panel is one on the technicalities, particularly and processes of ACF. I am not certain they have all the answers on risk because we don't have members from our statistics and economic research departments. I'll leave it to them to try and handle. In case you are not fully satisfied, we can have a one-on-one and we further your questions to the bank so that you can have responses. Winnie and the team, please.
Thank you, Victor. Sarah, I think you will take the question on whether or not the banks need to submit the requirements for each individual under block allocation, and whether BOU should reduce the document requirement for loan applications. The banks feel that there are too many documents that we're asking for. Is it possible to reduce that? EDF has already talked about the write-off process and why Parliament is still involved, because these are public funds. Unfortunately, that is what it is. But the write-off approved by Parliament only extends to the government portion of the funds, the 50%, because remember it is risk shared. So banks still bear the 50% of the outstanding loss, and so the other 50% that is government is what goes through the process of write-off and approval by Parliament. And I think that's what we talked about. We said we are in the process of streamlining these requirements so that you don't have to bear the 100%. If some of you are writing off 100%, that is what we need to now streamline. The FIA and the MOA so that we remove that ambiguity. Conditional approval of loans, I think that's okay. And I think we have been doing that for banks. The issue is if you're willing, if the borrower has accepted to take on the loan on the terms offered by the bank until BOU approves. So we will need to see that acceptance by the borrower in writing, that for them they are okay with, because it's the offer letter. Because I will tell you that there's a case, an ACF borrower asked for a loan, they got a conditional approval, but they have, and then along the way, I don't know what happened, but I think the case even ended up in court, where the borrower said, for me, I wanted an ACF loan, and the bank gave me a loan on their own terms. So you see how now Bank of Uganda comes on board. It's a bit of a challenge. But for us, I think it should be okay, provided that there's that explicit acceptance by the borrower that we are okay, provided that once BAU approves, then we will take on the ACF terms, and that will be the outstanding loan, because now the understanding is the borrower has already probably paid off a part of the loan. So we can't now take on the entire loan. We will take the outstanding loan at the point of approval. The process of automation, I think Sam, you will address that. Clarity on the insurance, I think Angela, you'll also address that.
Thank you, Winnie. Thank you, Jamil, for the question relating to block allocation. When we are reviewing the block allocation, the application requirements are basically 4 documents for every block allocation. There must be an offer letter signed by the borrower and the bank representative. Then there is need for the internal analysis and approval document. We need the national ID for the borrower, as well as the bank statement to cross-check especially the name of the borrower and the statement to reflect the payment that was remitted for that borrower. Then regarding documentation, yes, we shall require all the documents on the system. This is because analysis varies from one person to another. And for that reason, it will be more, for starters, we are still looking at the files the way you have submitted. It will be the normal form of files. The normal documents, the valuation reports, the offer letters. Generally, the way the checklist is given to you is the kind of documentation that we require on the system. And as and when we progress, we shall see whether or not the other documents will not be required. But for now, we are transitioning. We shall need all the documents on the system. Thank you.
I will just respond to one small issue which was raised by somebody, I think from Centenary. I think he had indicated that the system does not allow writing on only a portion of the what? A split of the facility. I think that is a limitation of the system. If it has not been configured to enable that, then I think it is time the bank or banks that have that limitation review their systems, configure them to make sure that they enable this requirement, because this is not something which is about to go. As long as the law has not changed, we shall still have this issue, and yet I think it's easy to tweak the systems to handle this requirement. I think the other one will be answered by someone from IT. There was something to do with whether institutions were not consulted. I think as in supervision, we use this particular system called BSA, which is going to facilitate this process. And it's already in use, but I think the person from IT can tell us from the technical side whether there are any risks that have not been addressed. Thank you.
Thank you, Alfred. I think I'll build on Alfred's point first. Okay, the question started with, did we involve the PFIs when developing the system? So, in the process of developing the system, we are now at the point where we are stress testing as part of the system before we roll it out for delivery. In this process of stress testing, this is where we are now working with 2 PFIs. There are 2 PFIs that we are working with, and they are helping us identify any areas we might have missed and basically cover all bases in case anything was missed. Then in regard to the other points that were raised, including security, liability in case of fraud, I'll answer them this way, that we looked at reuse of systems that are already existing for this first version of deployment.
The reason we did that was to rely on the security in place and the procedures and policies that the different banks have already put in place for these systems so that they can be reused while we are doing this automation. So then most of what we did as IT was to get this information from those already existing systems and then work with them internally on our side to automate the process internally on our side. So say, for example, for the bank supervision application, like Alfred mentioned, this system is already in place and it's already being used by the supervision team. So all your information regarding supervision is already being submitted. So what we did was just get off a segment of that. We basically created a role where we are using that same application for us to be able to pick off just the information that we want, while not allowing these people who we are allowing to this role to be able to either view or see what else is happening in the rest of the system. So that way we are segregating them from what they are not supposed to see. But then also in addition, they will also conform to the same guidelines that you, the PFI, you've already put in place for those systems or how to use those systems, so that we can address those concerns, especially of security, what is sent. Yes. Then in regard to fraud, it is possible, okay, there is that fear that maybe someone may act independently and then probably we have an application go through and succeed. We, in the detailed presentation that we shall be having on the system, you will find that there is a lot of human interaction in the system before any approvals are done. This includes also on the PFI side as well, because as part of the process, when an application comes in, when the reviewer is interacting with this application, they will from time to time contact the PFI directly for responses. That's one check. But then also, even when, say for example, for some reason it has been approved, this communication still is sent to, there is a communication sent to the PFI direct, I think, to inform them of that approval. And all these human interactions that we have, including with the PFIs, are there to help us control and maybe catch any such lapses that might have been missed out. Then integration to other systems that you have at the bank. The systems that we are integrating right now, you will not, like I mentioned, we shall not be integrating with your systems for now. All that we shall require from you is that you get your information that you have on your side and put it into the systems that we shall make available to you. So that will be a human interaction. We are not going to directly integrate with your systems to collect this information. So you may fear not much on that point. Perhaps maybe the other concern is about the RTGS. Once the payment is made, which that payment will be done through the RTGS. Our only interaction with it is just we try and we find whether, basically we validate the payments. We validate whether a payment has been made, but there is no payment information that comes directly from our automation now. Then the other question that was asked was in regard to how many systems shall we log in? Do we have a different system for application, refinance request? The answer to that is we only have one system where we are going to be submitting all our loan applications. Sorry, where we are submitting all these requests, including appraisal request, including refinance request, including the loan refund. All that information will go into the bank supervision system that we are already using. The other system, the only other system that we are introducing now is the one where you are uploading the supporting information. Because some of these documentations can be bulky, we have a system in place that you will then log into to be able to submit those supporting documentation. The third system is the RTGS, which I assume still it's not the same team that interacts with it. But the RTGS is basically like I said, since we are reusing systems, it was better for us to rely on an already approved payment system for us to use rather than rather than coming up with something entirely new. I think those were mostly the questions on automation. Thank you.
All right. Thank you, lady from, was it Bank of India? Yeah. So maybe I'll just give you a brief overview about what the Uganda Agriculture Insurance Scheme is and who we are basically. Like I said, my name is Angel Yopa. I come from Agro Consortium. So Agro Consortium is a coalition of 14 insurance companies that came together to provide subsidized agriculture insurance services to farmers. And we're doing this with the support from the government of Uganda, represented by the Ministry of Finance. So we offer subsidized insurance to both small-scale farmers as well as large-scale farmers. And the purpose of us being here today is to, one, find ways of how we can work better with the PFIs to have agriculture insurance embedded in the services that they offer to the farmers. So I'll just maybe take you through the categories of insurance that we offer. We offer we offer crop and livestock production insurance. And then we also insure input loans and production loans. Now that applies on the side of the financial institutions mainly. We work with various institutions, partners, who we offer these services to. We work with aggregators, off-takers, SACCOs, you name it. So someone actually asked about the coverage in terms of what we offer as the Uganda Agriculture Insurance Scheme. We cover a number of risks. We cover weather-related risks. We cover risks on basically crop and livestock production, uncontrollable pests and diseases. We cover things to do with maybe hailstorms, drought, excessive rainfall. So depending on the kind of product or enterprise that the farmer is dealing in, then we advise on the kind of product that we offer to them. But in the case of working with PFIs, we would like to encourage those banks that have not considered insuring their loans, offering agriculture insurance for their loans, to consider it, because this would basically, one, it would mitigate risks associated with agriculture production. So in case a farmer who has taken up a loan is not able to pay due to a calamity happening, insurance is able to step in and compensate the PFI in case the farmer is not able to pay for their loan. Yes, I think, yeah, I've tried to summarize. Thank you.
Thank you, Angela. There was a question on reporting on asset position. Somebody was asking whether they are required to only report the government portion, or they should report the total portion when it comes to asset position. And the response is that the expectation is that you report on the entire amount, not just the 50% government portion. There is a question that is coming, actually 2 comments. We're actually live streaming on our social media platforms. So somebody has raised a comment and says, the ACF is a wonderful facility, but only on paper. The PFIs are neither promoting it nor sharing accurate information with the potential clients, especially the vulnerable MSMEs. And I think that is something that we have discussed at length through the group discussions. And I hope that from this engagement that we have committed to really see that this perception changes, that now people are able to come to you and get accurate information, but not just information, but really be helped to access the financing. This was just feedback being given to you from the public. The other comment that has come through is a proposal for ACF to tier its financing. For example, the NDP3 strategic commodities, National Development Plan, they have strategic commodities that they have identified. Somebody is saying, can we, for example, apply, say, 8% the interest to those NDP strategic commodities, and then the 12% remains applied to the other commodities, the rest of the commodities. I just want to thank the person who has raised this comment. It's called Edward Bernard Sekaiba. We want to thank you for this comment. It is a proposal. The pricing is not determined by Bank of Uganda. This pricing is a result of discussions between the government and the banks, because again, it is a risk-shared arrangement. But we will take the proposal. We will have consultations with government. We have already heard from the banks on the issue of pricing, adjustment on the issue of pricing. Some people have said, no, we shouldn't adjust the pricing. Instead, maybe we should consider increasing the risk borne by government to say 70%. So these are all proposals that we're taking. We will go back. We'll incorporate them into the recommendations for possibly consideration. But thank you, Mr. Sekaiba, for the recommendation. Thank you.
Okay, thank you very much, panel. And ladies and gentlemen, I really appreciate your attention. Thank you for the questions, the participation, and being here all day. We know the targets that you have, so spending time with us is special. Thank you very much. Now, those that did not have a chance of submitting their registration forms, please, we need that information because when we have any particular or special engagements, it is you we shall be reaching out to, but also when we are sharing the slides that were presented, you need to get them. So just kindly wave your hand in case you have to submit it. Proceed, we'll pick it. We need those registration forms. Now, as you do that, please allow me, ladies and gentlemen, to invite the Executive Director Finance at the Bank of Uganda, Mr. Richard Byarugaba, to come and close this engagement. EDF, please.
Thank you very much, Victor, for moderating this workshop. Possibly, there is a colleague from Opportunity Bank who was talking about giving the borrower money at commercial rate, and then if Bank of Uganda approves, then they go to the ACF rate. My expectation was that you will give the ACF loan and put a condition in case Bank of Uganda does not approve, it reverts to a commercial rate. Because I've not seen where we have rejected applications. We've just asked for more information. So to reduce confusion, you can give the ACF loan, but put a condition that if Bank of Uganda does not approve, then you will pay our usual rates. that will be more helpful. What we are looking for in this session was to increase uptake so that we increase the amount of funds that we have disbursed. And we want to thank you for all these suggestions. The team is going to put them together so that we discuss them and see where we are going to amend, whether it is the memorandum of agreement or some of the laws. Amending the laws, that route is going to be longer. If we can find some things we can do in the memorandum of agreement, which is under our control, that will be easy. And most of the things you have said will be easy to do. But let me say that some of your suggestions are not increasing uptake. For example, you are saying we increase charges from 0.5 to 0.7 or to 1%. That means we are sending away our clients. You are saying that government gives 70% and you give 30%, and you earn a whole 12% on the 70%. So this, some of these we will discuss, but we will not possibly have all of them amended at a go. Let me tell you where we started from, why some things are like this. Government did not have enough money to put into this facility. Initially, it was, I think, 30 billion. We started with 30. That's why we had a cap on biological assets, because 30 billion, how much can you do? So we had a cap on biological assets. We removed acquisition of land. We discouraged forestry because the money was not going to be enough. Remember, we are financing agriculture, crops, animals, and agro-processing. Okay, so with 30 billion, that's where we came from. But with increased capitalization of the facility, we are going to look at the amendments. Definitely, something like biological assets, I've already discussed with the Deputy Governor. It is something we need to look at because the situation has changed. The issues of block allocation, yes, those are genuine. We are going to look at them. You want the amounts increased, and so even the block allocation file from possibly 1.5 billion to 3. Those are things we can do. Tree planting, it is something we are going to discuss. Initially, we are looking at agriculture and improving the food security. Trees were not considered as food. But with the increased funding from government, we can consider this, but the issue of the length, the period in which the trees mature will have to be considered seriously, because we need these cash flows. You don't want to put something for 15 years and you have not got any coin out of it, because there is no grace period, which is 15 years. And so those are some of the things that we are going to be discussing. The expansion of grain trade, yes, we will do that. We will look at it. I think possibly, maybe by error, we have already done some of it, coffee. But you know, the genesis is that there was a very big reduction in the price of maize. And so the minister promised to give money to those who are dealing in grain in the aggregators so that the farmer does not lose so much, so that the price can go up. I remember it was 200, he wanted it to go to like 500. And so that is the genesis why we started with that particular facility. We were addressing a problem. But now that we have raised this, yes, we can expand. We can expand on this. Acquisition of land, good suggestion, but the land must be very close to where you are, as we said. So if you have a farm of say, you have a farm of animals, cows, and the neighbor is selling, that is something possible we can discuss, but not 10 miles away from the current location. It must be next. remember, we don't have unlimited funds. That is the bottom line. We are trying to do this within the funds that we have. The other issue was block allocation. I've mentioned biological asset. Flyers, we have flyers. I don't know, maybe we would have come with them. We have enough and we can print as much. We have even interpreted them in the local languages. And so when we go to Soroti, we have in that language. We go to Kasese, to Kabale, we have enough for people to read. The challenge we have is that your own staff, they say they don't know about ACF. Even when we go for workshops and they are present in the tents, they claim ignorance of ACF. And so you need to help us to partner with us as we explain. You also explain to the branches. Branch managers are very senior people that can easily understand. Once you have the branch manager on your side, then the rest of the staff can easily understand. I also think that you need to support these initiatives. You also don't want to do business in a very poor environment where people are not aware and very poor. So it's for all of us to win, and that's why we chose to use those that we license, because we don't want to revoke the licenses, but we want you to support us. This is a government initiative. Let's exhaust the money that we have, and then we shall blame those who are funding for not giving us enough. So as I said, we are going to look at all these issues, even the challenges of turnaround time. You have a lot of complaints, but some groups were saying of recent they have seen improvements. We are going to continuously improve on this one, and also we shall engage government on these issues of write-off. But I can tell you, Parliament cannot relinquish any power. It's going to be difficult as long as the money is from the national budget. They want to follow it up to see that people have not stolen it. I doubt if they trust Bank of Uganda, they think we shall write off and take home. And so it is an engagement we are going to start, but this might come a bit later, and I think it shouldn't affect you because, as we said, you have deposits and you have lent 50%. The 50% has gone back. You write off, but you have a line. There used to be a line in the BS 100. You have funding deposits, then you have administered funds. In the assets, you have loans, of which administered funds are these. So it is the administered portion that concerns us. The people in Centenary, possibly after, if you can't split, you have a loan of 100, has gone bad, you provide 100. Maybe you do a write back of half, so that you don't have a capital charge for a loan that is from the government. And so we'll be working out the details on how to guide this process, and we increase uptake. It is good for all of us to develop our nation, and for the SBRF, I think the rule is that when a customer comes, you disburse, then you come to claim. You do not have to wait for approval. You can do this also for ACF, because finally, if we don't approve, then the person takes at the commercial rate, because you have accepted the risk anyway. By the time you submit the file to Bank of Uganda, you are very sure. That's why it comes. And so if you disburse, I think it does not do any harm. You disburse, then you come for a claim. Alternatively, you can wait. But for SBRF, you must disburse before you send the file. That's what we had decided, so that we quicken the process. You may think that when you disburse and Bank of Uganda delays, you are disadvantaged. It's not the case, because you are taking 12% on the entire amount, including the one of government. And remember, if you recover money from borrowers, you can keep it until the time for bringing it to Bank of Uganda. I think we are saying twice. So if you recover money in March and you bring it in June, I mean, you have an advantage of using that. So we put in sweeteners for you to help us to disburse these funds. I don't think you'll make losses. One thing I didn't hear is that you are not interested in reducing interest rates so that the borrowers can have cheap loans. This is something we can discuss. We can do from 12 to 10 because now we have going to remove the provision. I am not going to encourage you to increase from 12 upwards, but we think of helping the farmer so that we can have uptake and the government is happy with that. So with that, on behalf of Bank of Uganda management and on behalf of the team, we want to thank you for your time. A whole day here is not an issue that we can take for granted. I can see some of you are very senior people. We appreciate the effort you have put in this, the time, and if we call back, please accept our invitation. We are going to partner with you in making sure that when we are going to the regional areas to do awareness, we partner with you. We do have marketing resources, so we just need your presence. We can do the workshops and feed those who are attending, but we need your buy-in for this to succeed. So thank you very much. Thank you for your time and have a blessed afternoon. Thank you.
Thank you very much, Richard. Before I announce the very last items, in your folders is an evaluation. I mentioned the registration, but there's also an evaluation, and we need you to help us improve these engagements so that you have a better experience the next time round. So kindly fill them and submit them on your way out. We have tea, now that we've closed. We have tea, again upstairs where you had your break tea. Please do not leave it. Go and have it so that we do not waste these resources. Maybe finally, what EDF said as he closed just reminded me of a quote. I don't know how accurate, because they said that once a year you need a lawyer, you need a banker. Maybe that's not accurate. A doctor, that's once a year, and a preacher. But every day, 3 times a day, you need a farmer. So, as he said, we need to help the farmer first. Let that ring in our memories as we go. And for all these submissions that you've given us, we want to hope that they'll be approved, and therefore I want to pray so that they're approved. And as we close, we'll prepare the anthems, again one stanza. Ladies and gentlemen, as we close, let's pray. You can remain seated. Father in heaven, we want to thank you for this engagement. We thank you for every participant that has made it, and may you see them safely to where they are going, to their families and friends. And Lord, for all the submissions, proposals, ideas, Father, may they be fathered and approved for the benefit of this country. We bless you, and in Jesus' name we've prayed. Amen. Ladies and gentlemen, let's arise for the anthems, please. Have a good afternoon, ladies and gentlemen. Thank you for coming. Please, let's engage over tea. Thank you.